Rajesh, he's asking a short-term view on the stock. It has been under pressure as well, but what would you recommend?
So MCX is in uptrend across all time frame. Yes, from days high, some profit taking we have seen in this counter. But if we analyze on the long term perspective, stock is holding the strength. Stock is almost trading near to 20-day moving average support area. So still trend is on the bullish side. 2400 needs to keep as a stop loss. Once stock able to take out about 2570, then possible really towards 2751, 2800 we may see in the MCX. So hold the position with stop loss of 2400.
In fact, it's also, I think, up because of your crude, your
gold,
silver, etc. trading
right.
at higher prices and volumes going up for something like an MCX. Just to take a follow-up query on this entire aspect, right? Crude. Sriram Raghuraman from Chennai is asking this question on Oil India. Now, this is one of the companies that probably stand to benefit from elevated crude prices. She's bought 50 shares. He's bought 50 shares at the average price of 172. Wants a one-year view on this particular counter. Lancelot, what's the view like?
So Oil India is engaged actually in in assistance as far as the oil exploration company is concerned. So they provide engineering services for oil exploration. Now, just because prices may have gone up in the short term, it doesn't mean that exploration activity is suddenly going to get increased and you'll find orders, coming to them. And second is most of their orders are domestic. So in that sense, nothing has changed perceptibly on the domestic side. And so the stock is already factoring in all the positives that were there from their earnings as well as from their future outlook. And if you look at valuation wise, it is still relatively a little expensive. So there could be, whenever there's a correction, you could see a re-rating of the stock on the downside. So one should be a little cautious and probably wait for lower levels to add to the stock.
We were also showing these numbers coming in from Force Motors. Now the auto pack largely not showing so much reactions, and it's been a decent set of numbers. But look at the Nifty auto, and you might think otherwise, but that's largely the state of the market where we're in, because sell-off even in areas where there are good profits made is a theme that's visible today as well. But decent numbers from Force Motors, 8% growth in its domestic sales. But let me go across, take the next caller for today from Bengaluru. Rita has a stock query for us. Rita, good afternoon. Welcome to the show. What's your query?
Yeah. So since some of the stocks have corrected today, so I'm looking for long-term investment. So is it good to buy GMR Airports or Anantaraj or L&T? I mean, which one to enter in this lower levels?
Got it. Well, Rita, opportune time, opportune question as well. But Lancelot, between GMR Airports, Anantaraj as well as L&T, what would you recommend Rita to look at right now, and would it be in a staggered manner, or is it a good time to enter according to you?
I think from the three stocks that she has given, probably L&T offers the most a fruitful risk return benefit, because while the order book, almost 37% of its order book does come from the Middle East, and that could get hampered in terms of implementation. On the other hand, they also do have a larger domestic business. And second is that, there will be more orders. If you're looking at an investment time frame of 3 to 5 years, then there will be more orders that will come in terms of rebuilding a lot of the infrastructure that has got damaged during this period of, war, etc. So I think opportunities will be better for a company like L&T because of its strength in terms of being able to to sort of ride through this crisis period and then emerge stronger as the business again kicks in as compared to the other two companies.
Okay. In fact, Geeta also, who was calling us from Bengaluru, had a query on L&T, and Lancelot has already answered that. So, Geeta, I hope that solves your query. But Rajesh, quickly, I'll take up L&T with you on charts as well. What is the technical setup looking like?
So long-term structure is bullish, but yes, on the near-term chart, some profit taking we have witnessed in this counter. Stock is almost trading near to its 50-day moving average support area, which is placed at around 4,000, 4,040 area. So I think if stock able to regain above 4050 level, I think here we may see again, continuation of uptrend. Overall structure is bullish. Buy and accumulate would be the strategy. On the downside, keep a stop loss of 3950. And if your horizon is for long term, yes, we do hold bullish view for this counter.
Okay, the next one is on ITC Hotels. Ashish from Delhi is asking. He's holding 2,000 shares at the levels of 202. He says that it's moving towards its 52-week low. Should he average out and buy at that levels? ITC Hotels is the stock. Lancelot, what is your view? I mean, it's not that, it's not been performing well. The fundamentals, the operational metrics look strong enough, but the stock is not moving. What's the view like?
I think as far as ITC Hotels is concerned, you have two issues. One is obviously the business is going to get impacted because if this war gets prolonged and does not get settled, in the next couple of months, there could be a large number of cancellations for foreign tourists coming into India. People from the Middle East may not be traveling. There could be disruption as far as weddings and conferences and other things are concerned. So all of which are actually feeding the hotel business. So definitely this will have an impact on its profitability. Second is there is still a bit of an overhang on the stock as far as British America Tobacco Company, who's a major shareholder, has been liquidating part of its investment over time because they do not want to remain invested in hotels because that's not their core business. And every time they need to liquidate, there will be pressure on the price. So that also will add to it. But if one is looking at, you can accumulate the stock at, from current levels downwards in small lots, because over the next 3 to 5 years, definitely the business will grow and you will see significant growth coming in here, and valuations will then move up as things normalize.
That's the view on ITC Hotels, but we have Mansingh calling us from Andhra Pradesh. Mansingh, you have a question on translated lighting, I suppose.
Yes, ma'am.
Go ahead.
I'm holding 150 shares, ma'am, at the rate of 620 rupees. And fundamentally, it looks very sound and a good order book.
Right.
Should I wait for average, or should I start accumulate here more? Should I add more number of shares here, or should I wait?
Got your question,
I want to know the
Mansingh.
technical view from Rajesh Palve, ma'am.
Okay, Rajesh, translate lighting, your quick view on this one.
So stock is in corrective mode, and in this pullback, stock has witnessed a major supply pressure at around 600 level, which is very important to cross on the higher side. Once stock able to take out this 600 level on a weekly closing basis, then we may see some pullback action towards 650, 670 zone also. So at this juncture, in this correction, if your horizon is for little longer term, so yes, you can buy and accumulate. On the downside, the major support area for this counter is placed at around 490, 475 zone. So use this volatility as a buying opportunity in this counter if you want to buy for long-term perspective.
Time now for the rapid fire round in this edition of Fast Profit. Just as we are seeing a 150-point recovery on the Nifty in just the last 17 minutes, but Rajesh as well as Lancelot, you know the drill. The first question, it's on CMS Infosystem bought at 320. What would you recommend, Lancelot?
I would recommend, one can exit at this price.
Okay, Asian Paints is the next one. Rohit wants to know if this is the right time to accumulate. Lancelot, your view?
Yes, Asian Paints one can accumulate.
Shriram Finance, is it a right time to enter is what Anil Singh is asking. What would you recommend, Rajesh?
Yeah, one can buy at current level also.
NTPC is the next one. It's dropped 2.5% today, but for the next 5 years, can I continue to hold? Lancelot, your view?
Yes, one can continue to hold NTPC for future as well.
IRFC, should Sridhar continue to hold or sell out, Rajesh?
No, avoid at this juncture.
Okay, Paytm, will it be good to increase position right now? Ashish from Cuttack is asking this question. Rajesh, your view?
If your view for 6 months, yes, you can add in this decline.
The next question that's coming in is on MRF, bought at 144,000. A short-term view, Rajesh, is what Anita is asking. What should she do?
MRF, continue to hold it. 130,000 needs to keep as a stop loss.
Okay, Canara Bank is the next one. 200 shares bought at the levels of 148. Divya wants to know if she can average. Rajesh, your view?
Yeah, she can average out at current level.
Crompton bought at the current levels by Anuj. Should he continue to hold, Lancelot?
Yes, you can continue to hold.
Okay, Lemon Tree is the next one. 140 shares bought at the levels of 117. Should I hold or book profits? Arun from Hyderabad wants to know. Rajesh, your view on the charts?
No, I think exit as a stock has broken the support area.
Canara Bank bought at 148. Lancelot, should Divya continue to hold this counter?
I think one can exit this counter even at this price.
Okay, the next one is on Reliance Industries. From long-term perspective, can Pawan Kumar go ahead and buy right now? Your view on this, Lancelot?
Yes, one can look at adding in small lots.
Okay, all right. So that's the view coming on Reliance. But with that, viewers, completely out of time. Lancelot as well as Rajesh, thank you so much for taking out the time and of course helping us answers, on a day where it's much more required. So thank you so much for that. With that, viewers, completely out of time. Do stay tuned. India Market Close up next.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome. You're watching India Market Close, and it's one of those sessions where perhaps investors will be happy that the market closes. It's been a really, really tough day. Any kind of recovery that was hoped for after markets opened gap down seems to have evaporated. Although at 2 o'clock this afternoon, if you look at this line graph here, you have seen some amount of relief coming in. Now, what happened here between 1:45 p.m. and 2 p.m.? It started becoming clearer and clearer that fighting is only intensifying, and oil refineries in Saudi Arabia are now being targeted. Here's what's happening. Quick snapshot for you on what's happening in the markets this afternoon. The Nifty is struggling around the 24,700 mark. It's seen its worst year-to-date start since 2020. For the month of March, you've seen a 533-point drop on an intraday basis for the Nifty. But remember, budget day was actually worse. That was a 749-point drop. So through the day, budget day was even worse than today. But on a year-to-date basis, it's been the worst drop since 2020. Over 1/4 Nifty stocks have fallen between 2 to 7%. That's how deep the cuts have been. And 95% Nifty mid-cap 150 stocks have declined in trade. It's the broader markets that are hurting even more. And if you look at the small cap, you will see what I mean. 90% Nifty small cap 250 stocks have declined in trade. Support levels, remember, on budget day were at a low of 24,571. And for the bank Nifty, support levels are at 59,000. What is gaining? Let's show you some of those safe havens that are gaining, and where investors can really hide for some kind of cover. Muthoot Finance has seen a Morgan Stanley upgrade. So, some relief was seen there at the earlier part of the day for Muthoot Finance. Hindustan Zinc, because of higher silver prices. Select defense names were also there in place. Remember, markets are closed tomorrow for Holi, and the Nifty weekly expiry has been shifted to Monday. That's also what you're seeing. That compressed time frame is where you're seeing all of that volatility. I wonder if you can pull up the India VIX before I show you the charts for the day. And India VIX is nearly 27% higher. I mean, this is astonishing at 17.5. This is showing you where the fears of the market are. Let's pull up the Nifty heat map for you very quickly and just give you a sense of where we stand. And it's quite a bloody day, to be honest. There was some hope that things would be better than expected, but it has been quite harsh. Of course, Indigo, flights cancelled, crude prices, no brainer, 6% down. Larsen and Toubro, fair amount of exposure in the Gulf region, which is why that crisis. Adani Ports, anything to do with logistics, will suffer right now. So you're seeing that through and through. On the winning side, Bharat Electronic, Hindalco, ONGC, obvious choices, crude prices go higher, are doing okay. But European markets have also been hurting, which is why you're seeing this escalating pain point everywhere. I'm just going to pull up the BSE 500 gainers and losers before Hiral comes in and tells you about the factors of the morning. I mean, Tejas is in a parallel universe. There's a parallel Marvel universe going on when it comes to Tejas, which is why it's another 10% up. But we told you about Muthoot Finance. That has been working well. Solar India, and some of those stocks, they're few and far in between, because if you look at the advanced decline ratio, it's quite dismal. On the losing side, Easy Trip. I mean, people are not really excited about traveling right now. And a lot of travel coming in from India happens in this region, which has impacted Indigo, L&T we spoke about. And there you have quite a few pain points, Hiral. I'm sure the advanced decline ratio is also looking pretty poor at this point.
Yeah, I mean, you can see that from where we started off. We've still slightly, in terms of the advances, Tamanna, we've improved, but in terms of the declining, we're absolutely where we are.
Yeah.
So no major changes coming in on that front. But what's interesting is that recovery that you spoke about as well. So I think that little bit of certainty that's coming in to some extent is telling you where we are right now. Still, the cuts are deeper. Let's not forget that. How further down we will go is the key question. In fact, let's quickly look at few of the factors that we are watching out for. We'll quickly swipe them through, because you're talking about the escalating geopolitical tensions in West Asia, which have triggered that further sell-off. Now, the operations at Aramco's refinery in Saudi Arabia have been suspended post the drone attack. Now, Aramco refinery, if you go to see, is one of the largest, and it is integrated with the Ras Tanura port, and that's why it becomes very important. When you talk about what goes from Ras Tanura port, that is crucial, because it's an outlet for Saudi oil for Asia, Europe and the US markets as well. So even India comes in, in consonance to this. Now moving from here on, if you see in terms of Nifty, Tamanna was talking about the support level. Now 24,700 has been the key support that everyone was watching out for from a psychological perspective. But now we've again retraced back above the 24,700 mark. But on the downside, two levels that you should be watching out for is 24,600 and 24,500 if there is a further correction. In fact, in today's session, almost close to 7 lakh crores of wealth erosion is what investors have seen so far. Moving on, if you see in terms of the rupee movement is also very important. We've weakened to a 1 month low, and this is because high oil import bill is something that is weighing on the sentiment. In fact, in the month of February, we were talking about the kind of improvement that rupee has seen since October. Lastly, if you see in terms of the US dollar, there you're seeing 0.5% move coming in there. The 10-year GSEC yield, that has risen to almost 6.69%, and this is on the back of the potential inflationary pressures that could be coming in from energy costs. So this is what you're watching out for in terms of the factors in today's session, which talks about sectors and macros. Over to you, Tamanna.
Okay, we'll get back to some more of those. Himen Kapadia is with us this afternoon, as is Lancelot Dicuna. Welcome to both of you. Himen, I want to start with you first. I mean, are you seeing something at the end of your chart with the way markets are falling? What really are the levels that you're looking at?
A very good afternoon to you, Tamanna.
Good afternoon.
Thank you for having me on the show. It's always a pleasure.
Yeah, likewise.
Very well, frankly speaking, we should have been given a holiday because India qualified for the semi-finals, and we wouldn't have been put through this torture. But anyway, on a serious note, Tamanna, thing is, we are at, I won't say crucial, but reasonably important levels. Just give me 30 seconds. Nifty made a low of 24,605 on 1st October. Nifty made a low of 24,571 on 1st February. Nifty makes a low of 24,603 on 2nd March. The reason for giving you these data points is this is the third time we have come back to this level. Once we briefly broke through 20 and reached 24,344. This is besides the 3 points that I told you. There was a bullish gap. I spoke last time that needed to get covered up. Now there's a bearish gap. So firstly, if 24,588 breaks, I really, at the risk of sounding utterly bullish at this point in time, I think not. Like you mentioned, VIX is at 17.5. If you go back in history, many times bottoms have been made on the highest possible VIX, Tamanna. So we've come to this previously tested level for the third time after a precipitous sell-off. I say this holds for 48 hours. Things should simmer down. And this bearish gap that we have seen, by the time we speak next Monday, I think we would have covered that up. So things don't look good, but I'm not that bearish after what has happened. This level is crucial. If it holds, I'd say, I'm not telling you to buy, do anything, but not panic. It's okay. We've been here, done that. Tamanna.
Been here, done that. You said you should have had a holiday on Monday. Tuesday anyway is a holiday. Wednesday is actually supposed to be Rang Panchami. So basically, you want the week off. Let the world come to its senses. Pretty much is what you're asking for. But since we have to work and, wishful thinking won't cut it, what would be your picks?
Well, sorry for dragging it further, but China has 6 days holidays. Why can't we see the semi-final and Wankhede on Thursday and then start the market anyway?
Oh, okay. So Friday straight. Yeah, it makes sense. If you're going for it, then end to end.
Yes. Okay. Now, seriously, it really doesn't make too much of sense in doing anything. But yeah, these are small trading buys, Tamanna. Firstly, a buy call on ITC. Oversold, positive divergence, downside limited at strong supports. So it's a trading buy at 310, stop loss 295, target 340. Second one is Infosys. I believe the IT thing has been hammered. Everybody left, right and center is bearish. Classical times for a bottom being made. So as of now, I'm looking at a short-term revival. I think this could convert into something on the medium term. It's really, really overdone. Buy Infosys at 1280. Stop loss 1240. Target of 1360. Once again, same logic applies. At strong supports, oversold, positive divergences are coming. Oscillators are giving crossover buys. Tamanna.
Okay. Infosys is an interesting pick that everyone's watching out for, because if the reversal is overdone. Probably this would be a good opportunity as well. But let's quickly take all the viewers through the stocks that we will be discussing during the day. At this hour, I would say, and you know what's on our watch list. L&T, the top loser in today's session on the back of the exposure that they have to West Asia. Oil marketing companies could see fuel margin pressures, and that's what is you're putting that pressure on BPCL, IOC, and HPCL. ONGC, Oil India, and Reliance Industries also on the back of the geopolitical premium are in focus. Your shipping companies on the back of the tensions in the Strait of Hormuz are putting pressure there. Aviation stocks again on the back of jet fuel prices and a lot of your cancellations that do come in. So it's a double whammy when it comes to aviation counters. So watch out for this space. Online travel companies, your B2B travel companies all are under pressure. Titan Kalyan, again, it's the exposure when it comes to West Asia. Defense companies, it's interesting because sentimentally it becomes a positive, but now you've already started seeing profit booking coming in that space as well. Hindalco, where the UBC scrap prices have surged, so that counter is in focus. Tejas Network, a couple of days ago, they did see a 5G order win. That stock is up 55% in the last 3 trading sessions, and that's the reason why that strong surge there. In fact, that's the stock of the day as well. And CleanMax, a weak market debut, Tamanna, that we've watched out for on this counter. The subscription levels itself for a CleanMax were very low. So something that was anticipated, but really, a bad day for them.
I think CleanMax also gets a little bit of a reprieve because din hi itna kharab hai, so maybe it's a bad day. But we'll have to wait and see if it actually recovers. Just want to take a quick look at what's happening on the F&O side, and Puneet joining us with that BSE F&O setup. Good afternoon, Puneet.
Well, good afternoon, Tamanna. It's largely been a down and out day. Just seen some buying, in the latter half of the last 30 minutes, but continuing to see a very theme-specific action even on the F&O side. So defense as well as the safer plays like Hindustan Zinc is seeing build-up of longs currently in the system. When you also look at the short covering, you are seeing stocks like Muthoot Finance, largely the gold rally continuing and boosting, some shorts being covered in this particular counter, while BEL also continuing the defense theme where it is seeing short covering today in the system. When you also see that in terms of the longs being unwinded, Samvardhana Motherson actually, is one of the key counters, has hit that high in the last 6 months and come back and retreated yet again this time around. So seeing longs being unwinded for Samvardhana Motherson, and NBCC largely joining the list of infra companies that the market just doesn't want a flavor of at this point of time. Finally, in terms of shorts being built up in the system, there's L&T that features on this particular list. 37% of the company's order book coming in from the Middle East, and hence a down and out day for this counter. While RVNL is back again in terms of the build up of shorts after the budget yet again, and all of these counters in focus largely on the back of the Israel-Iran impact, but certain specific actions like L&T seeing that pressure on the stock as well.
Okay, L&T, no brainer. Over there with that kind of exposure is going to see some pressure. Neeraj joining in as well on the closing show. Neeraj, what are you really picking up? That nervousness, the swings that we're seeing up and down is clearly showing that the overall sentiment is very negative, but we've seen a fairly decent recovery from lows in the last 20 minutes or so.
Yeah, and good afternoon to all of you. And Tamanna, I would love to know how you are thinking about the geopolitical angle of it. I heard Hiral speak a lot about those individual stocks as well. So very interesting there. But just a couple of things that I picked up when I was speaking to a few market experts in the last 30 minutes or so. One, that save for the Australian markets and the Shanghai markets, almost everything else has been penalized today. Europe is not starting off well, and Dow futures as we speak are down 600 points because Iran reportedly has rejected those US stocks as well. And there is a Saudi Aramco refinery which has been hit. So crude, which we were talking about as not having a very rocky start, currently WTI above 72, 73, Brent above 79. So clearly the pressures are showing. It'll be very interesting to see how large is the FI sell number in the session today. Everybody's eyeing that because 3 people that I spoke to, guys, over the course of the last half an hour, everybody was unequivocally clear that for today's session in the near term, you'll probably see large FI sell numbers as well. And nothing quite looking constructive. Sure, there are individual pockets that Puneet highlighted in zinc, etc., but nothing looking very constructive. And lastly, because we have a holiday tomorrow and the expiry today, I think most people are penciling in that people want to err on the side of caution and not quite go home with any kind of long positions because who knows what tomorrow might bring and they might not be able to square their position. So I think that's probably the tactical plays that are getting played out. But same question to you, and I have a question for Hiral, but Tamanna, to you. Now, because you looked at politics so closely, right? And you would have spoken to people, you would have analyzed it. This seems protracted in nature, or is it difficult to call right now?
No, some things have clearly become worse and visibly worse. So the statement from Qatar saying that US warplanes have been shot down in Qatar, but no one is hurt, that tells you that it's protracted. The Iranian security chief has said no to negotiations. They don't want to have any conversations with the US right now. So that is a big negative. What's happened in Saudi's Aramco unit, in which Hiral also spoke about, that is a negative, though they're now saying that it's being contained, etc. So some of those things are pointing towards escalation. Plus, today there are more reports of loud blasts heard in Dubai and Abu Dhabi as well. And it could be anti-drone missiles staving off any attacks and then debris falling. That could be the source of the blast. But the fact that Dubai and Abu Dhabi, a very, very visible area in the region, is being targeted is telling you that Iran is trying to send a message, and it's not done yet. If we think this is going to be 1 or 2 days of fury and then it ends, that's looking unlikely, and that's what's really escalated since this afternoon. I want to go to Lancelot Tikuna and get his view on this as well. Lancelot, is the smart money saying stay safe right now, or are we seeing enough optimism to boost that kind of recovery? Because there is a fair bit of recovery from the day's low across the board.
So I think, Tamanna, there would be some fall in valuations which would have prompted some amount of investment at lower levels. Given the steep fall that we saw, there's bound to be some accumulation at that levels. But like you said, this is not likely to be resolved in a couple of days. And I think the indication is that it could even take a couple of months. Now, the economic impact of a prolonged war, which is stretching over 3-4 months, is going to be significant across the global economy, and it will impact India and Indian companies as well. It is not merely looking at it only from an export perspective or an import perspective. When the economies of Middle East get impacted, companies which are related or even people related in India will get impacted, and that could have already we were having a little weak GDP growth, and corporate growth was just coming back, due to the improvement in situation with companies, as well as, because of the GST cuts, etc. We were seeing some demand improvement taking place, and all that could get sort of negatively impacted if this continues for the next 2-3 months. So I think from a smart money perspective, one should make some small investment, but definitely one needs to keep a lot of investment ready. If this does correct further, there could be a very sharp and deep correction. Then at that time, valuations will become really attractive.
No, fair point. I think and that's a fair assessment too. But Himen, I want to bring to your notice the fact that there is a bounce that is happening now. Could it be because of expiry-led things, part one? But part two, I heard you say at the start of the show that you are maybe contra-bullish. So in some sense, from the low point of the day, your call has worked out well. The question is, because it's a holiday tomorrow, are you taking home long positions? Or would you square off any intraday profits that the brave may have made?
Very, very valid point, Neeraj. But I would also go with half of you already, I think, answered your question yourself. If there wasn't a holiday, I would be slightly more copacetic about holding on for a day more. But like you said, I mean, there's a holiday, things could, worsen. But I just, like I mentioned, you must have heard, I mentioned with Tamanna, price points. This is the third time we've come there. So unless, I don't say this, but unless there's some real massive escalation, I hope that doesn't happen. I think this whole, but yeah, coming back to your main question, will I hold on for Wednesday? No. If I'm making money and was brave enough to buy at this point, I'd book intraday and go home.
So book intraday and go home is what came in as talking about, but stay with us. You know, in spite of all of this negativity, there is one stock which has been skyrocketing in a weak market. In fact, if you see the 4 or 5 day performance, stock is up nearly 55 to 60% in the last couple of days, and we're talking about a Tejas Network. What's working for them all this while? Because Q3 was pretty weak for the company, but in spite of all of that, a good buzz around it. My colleague Jasmeet joins it to tell us more. Jasmeet, I mean, we've picked Tejas Networks as a stock of the day, but lots brewing there. If you could just take us through, what are you picking up?
Well, Hiral, thank you for that. As rightly said, the stock has surged nearly 55% in last 3 trading sessions. Well, this thing comes after the company has received an NEC order from a Japanese corporation to supply the 5G manufactured and supplied units for telecom company. Well, in terms of overall stock performance, the stock is still down 48% when you look at a 52-week low level. So, though we have a surge, but the stock at a low base is still trading below its 1-year average. Now, in terms of the key trigger, the first one is the strategic 5G deal which the company has signed with NEC. While this deal is to extend, manufacture and supply the overall massive 5G radios. While this deal also helps the company expand their base, given NEC is a global telecom body and has access over 75 countries, this deal will help company to gain revenue but also increase the global presence and be a good alternative for Chinese product. Now the second trigger is the overall strong volume. The current volume which we see are roughly 14 times the 20-day average, which is pulling the overall stock price up. Now third is the PLI scheme. While the company is a big beneficiary when it comes to the overall PLI scheme which they get under the 5G and the broadcast radar, so which the company has been receiving in the terms of the refund from the government. The company recently received 70 odd crore in the month of Feb on the back of the same PLI scheme. While the fourth one is the Tata factor. While the company is backed by Panatone Finvest, which is a subsidiary of Tata Sons, and Panavest currently owns 53% stakes in the company, which is also a positive key trigger. Now, what is next? What to expect going forward? Firstly is the inventory risk. Do we have also some concern areas for this particular stock? The inventory risk, current inventory stands at 2,200 crore, while this is on the back of the delayed BSNL deal. Given the BSNL deal which company signed back in 2024 is still not executed, which is creating overall pressure on the overall company's inventory level. The second is the execution risk. The net debt stands at 3,300 crore. This is again on the back of delayed deal where they haven't paid the money back to the debt holders, and further that's what creating the pressure on the overall balance sheets. Well, third is the high cash burn. Company is currently funding its operation by the reserves they have. While the fourth one is the CEO position is still vacant and the company has no further commentaries on that. They're still looking for the right candidate, which in turn makes an overall direction weak for the company going forward. While the key triggers which can be going forward with the BSNL expansion, once they receive the PO order BSNL deal, that will be a key expansion for the company given the revenue flowing for the company, and company has been loss making for last 4 quarters on the back of the similar things of high debt and high inventory risk. Lastly, the company is pivoting towards a 5G model where they're getting international orders. Currently, international revenue forms 15% of the revenue, where the management targets 50% going forward. Well, that's some trigger which will be watched out carefully going ahead.
Okay. Thank you, Jasmeet, for that. In fact, Lancelot, I want to take a question with you on this one. Fundamentally, things were not really very strong when you talk about a Tejas Network. Do you think this order could be a turnaround story and all the woos that the company has been sitting on will get negated because the surge is nearly 60%, or would you say just book profits and get out now?
So I think if one has bought it earlier and if you were sitting on 60% profits, I would look at booking profits at this point in time. The reason is that while this order seems to be very good and healthy, implementation of the order and the actual earnings that will come in post the implementation of this order is what will actually drive earnings. Then second is about sustainability of future orders going forward. This again could be a challenge because there are not that many manufacturers or people who are putting up 5G networks in the country or even overseas. So the market is also relatively on the smaller side and the investment is also large. So I think when you look at all these things together, I think it's better to book profits and take the money off the table. I'm sure you will be able to get the same stock at lower valuations at some point in time.
Okay. Just so Tejas is one bright spot, but I just want to focus a bit on the recovery that we are seeing across the board. And let's just pull up some intraday charts to get you those details. I mean, look at the Nifty. Yes, about 300 points down even now, but almost inching up towards the best part of the day as we go into close. I want to pull up the small cap because the small cap index is the one which was the worst hit through the day and look at whether there's some recovery there, there's some recovery there as well. The advanced decline ratio will also give you a clearer picture. So we are going off the low points of the day. If you look at the sectoral heat map, and I wonder we can show you that broader picture as well of what is recovering the best at this point. You'll possibly see metals are showing a good recovery actually, not bad. Defense stocks anyway were doing decently. So that's also showing a bit of recovery, as are pharma stocks. I'm going to go across to Neeraj as well for a quick take on this. Neeraj, do you think that this is just essentially a technical recovery we're seeing, or some of those fears are fading?
No, I would reckon, my personal view, Tamanna, that it is, and based on the conversations that I've had, that it's a bit of a technical recovery.
Yeah.
Too much uncertainty, right? And some of which you highlighted very well, some of which Hilal highlighted very well. So technical recovery, maybe some expiry-led things, and just maybe because we were sold down so badly, much more than what the rest of the markets was. I mean, ASX, for example, ended in the green. So in some sense, some bit of that. But I would reckon the same logic of not going into the holiday with very large long positions would hold true for the short side as well. You don't want to go with extreme short positions because you don't know what will happen over 48 hours, since so much is happening in 24 hours itself. So I would suspect that to be the case. See no other reason except for just that sharp sell-off recovering a little bit. Let's see what happens in the next 40 minutes though.
Yeah, the next 40 minutes are going to be very interesting, if there is a reversal from these levels or not. And I think IT also is a sector which is coming into as a contributor, and the shorts probably that are getting covered ahead of the holiday tomorrow. But let's actually head across to my colleague Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, the question over here is, anything that you're picking up in terms of the recovery that's happening in the markets right now from the lows?
Well, as Neeraj was mentioning, it's most likely a technical recovery, because Nifty seems to have found support near the 24,600 level. Now, do remember that the earlier support zone was close to that level at the budget day low. That was 24,571. That was the original support level coming in for Nifty. And around that level, yes, Nifty has found some support, and we have seen a strong recovery of around 200, 250 points odd in trade. But what dealing rooms are indicating is that there is not much of an optimism in the market. It's not that people are going ahead and buying stocks in a big quantity, in a big way, because they're quite bullish on the long-term perspectives, given the fact that there has been a lot of volatility and a lot of uncertainty globally that we have seen. But few stocks that dealers have highlighted in trade. Firstly, it's Vedanta. There are buy flows on institutional desk for this counter. At least what dealers are indicating is that the stock is currently best placed in the current situation, given the fact that commodity prices continue to increase, and Vedanta is could be one of the biggest beneficiary of that, given the fact that it has exposure to aluminum, silver, zinc, and also oil as well. When it comes to L&T, the stock is down in trade, down around 5%. This is largely because of its exposure towards Middle East. But post this fall, a few large HNIs have started to accumulate this counter at lower levels, because they see long-term opportunities that could come in going forward as and when the situation settles in the Middle East. And lastly, a few stocks that are there on the DI desk that are seeing buying action in the DI desk: Shree Cement, Kalyan Jewellers, and Sona BLW. All these three counters are seeing some buy flows coming in on the DI desk at lower levels. So keep an eye out for these counters as well.
Okay. Buy flows on DI desks at lower levels. I mean, they're sitting with cash to deploy, I suppose. Pankaj Murarka joining in this afternoon, CIO at Renaissance Investment Managers. Pankaj, thank you so much for taking out the time and speaking with us. Are you getting a TGIM feeling? Thank God it's Monday and tomorrow's a holiday. Whatever happens, at least, we can try to get some breathing room to deal with it. Is that the sentiment coming in? And what do you put down this mid-afternoon mild recovery to?
Well, clearly, I think, Tamanna, meaning it's very unsettling in terms of where things are playing out. But from whatever data and information that I am seeing, I don't think so that this conflict will sustain for a long period of time, given that in a very short period of time, US has been able to decapitate their leadership, including the supreme leader. Clearly shows that they have a very high upper hand. So I think my view is that I don't see this lasting for a longer period of time. More importantly, I've been saying this for a long while, that India there are very few economies in the world like India which are significantly insulated from external macro shocks. And we are at a point of time where all the four balance sheets, the Government of India's balance sheet, RBI balance sheet, banks balance sheet, and corporate balance sheet are very, very resilient. So I think India has the ability to deal with any external shock at all levels of the economy, very comfortably. The only spillover effect to India and to the global economy is going to be through oil prices. But I don't see a significant dislocation in oil production either. So I would still think that probably in the next few trading sessions, we should get over this and probably the world will look much more normal. The geopolitical influence and impact of that is much deeper because it's a very significant event that has happened. But I think that will play out over a period of time. So I think, and also I must say, after a long time, I find a lot of pockets on a bottom-up stock picking basis where I find a lot of companies where valuations are reasonable or very attractive. So I firmly believe for a longer-term investor, given that the kind of fear that exists in market is throwing up a lot of value in the market. So it's time to probably invest selectively, go and buy into some of these names, take a 1 year, 2 year view and buy into some of these names.
Which ones? Like which ones? What is looking attractive right now with a longer term view? I mean, there's no choice right now, think about it, but to take a longer term view.
India has always been a great story from a longer term view, and long term investors have been extremely rewarding. So I think it makes economic sense to be a long term investor in India. India is a paradise for growth investors who've been invested for a longer period of time. The larger banks looks very attractive because they are in a great shape, and with cyclical recovery in credit and uptick in the economy, I think valuations are extremely attractive. So we own HDFC Bank and ICICI Bank and we like them. So I think a correction is a great opportunity to buy into them. I find opportunities in some consumer names as well and some of the beaten down IT names as well. So I think, and obviously there are stock specific mid and small cap companies as well. So I find a lot of opportunities now on a stock specific basis because we're coming out of a cycle where over the last 18 months, the index has been flat. We've had some earnings growth. More importantly, the earnings outlook going forward is much better than what it has been in the last 12 months. Trade headwind, India's, the penal trade, whatever duties that US has imposed, tariffs US had imposed on India was a big headwind on growth and on macro factors, including currency. All of that is behind us. So I certainly believe the next 12 months from a growth perspective, both for the economy and from an earnings growth perspective for India will be much better than what the last 12 or 18 months has been. And given the fact that markets, the large cap index, Nifty is flat and a lot of mid and small cap are down 20, 30, 40%, I find a lot of pockets of value in the market. So I think as the classical saying goes, one should be greedy when others are fearful and there's blood on the street. I see some of those signs here today at this point of time. So I think it's time to invest into this market and not run away from these markets.
Okay. So Pankaj, I'll just take that point forward. Where you're seeing value, how are you looking at a L&T very quickly? Because it's corrected more than 10% from the highs if you talk about the company. Now, with the exposure that they have in the Middle East, everyone's talking about the kind of impact it would see. But once things cool down, that's where the opportunity will lie for them as well. Then would you take this opportunity to start accumulating L&T?
I think L&T is a very reasonable investment even now. I know they have a very large operations across Middle East, and the fear is that could get impaired and there could be some short-term impact on projects because of whatever is going around in Middle East and so on and so forth. But from a slightly more medium-term perspective, I think L&T is very well poised across all the growth investment sectors in India, across data centers, whatever is happening on the semiconductor side or on the power side. So I think, meaning one should use this correction to buy into L&T if you, and a caveat, we are holders of the stock. So I think the reaction on the stock price is a bit overdone.
Yeah, in some sense, if you look at BHEL, by the way, that has not corrected at all today. In fact, was up about a little bit and currently to about 1%. And Pankaj, two questions for you. One is micro and one is macro. On the micro, the metal counters are exhibiting a lot of strength. Bottom up, we've seen individual plays like Sterlite Tech, Tejas Networks, etc. do very well on a rocky day like today as well. But are metals, because of the cycle that they are in, looking a good investment candidate, or is it too cyclical for your liking?
You're right, Neeraj. Metals have done phenomenally well over the last 18 months. There's been a whole trade around de-dollarization or the weakening of the dollar in the last 18 months. And consequently, we have seen a very sharp move in commodity prices, including metals, both largely non-ferrous and also in precious metals across gold, silver, and so on. And likewise, I think, but large part of gains are priced in. I am not in the camp of whole de-dollarization. I still think that dollar remains the prime currency for the world. And I think probably, if at all anything, we are in for a stronger dollar going forward from here on. So I think probably it's not a bad idea while there's underlying strength in commodity prices in these stocks. But for people who've been invested, it's not a bad idea to take some profits off the table. And I find more value in some of the other pockets of the markets, as I said.
I hear you. Pankaj, I have one more question. Today, two of your peer sets, we spoke to Sameer Arora in the morning, who said that he believed that 2026 will see the return of the FI money. Then we had Mark Matthews of Bank Julius Baer, who mentioned the same thing, that he believed 2026 because FIs will now start questioning the valuations of markets like Korea and some of the others. And India, because it's not performed and earnings growth will be strong, will come back. You do a lot of these global checks and meetings with global money managers too. Do you reckon people will be enthused to invest into India? Are your connects telling you that they want to start looking at India again?
I think so, Neeraj, because what has essentially happened is India is now globally labeled as recognized as a reverse AI trade. Last 18 months, all the capital flows into equity markets have singularly gone into AI companies or the AI as a theme across semiconductors or the hyperscalers or companies which or utilities which are supporting them and so on and so forth. But we are clearly seeing early signs of peak out in the AI rally in stocks across the whole AI basket across hyperscalers, semiconductors, and so on and so forth. Last week, Nvidia declared its results. The results were clearly blown out. They gave a guidance for the next quarter, which was far ahead of the upper end of the street estimate, and the stock was still down 10% because markets are clearly recognizing the fact that some of these companies might have a strong growth trajectory for the next 4 quarters, but clearly they see a slowdown coming beyond that. So we are clearly seeing a trend where money is being taken out of AI names because these stocks have done phenomenally well, and valuations from a medium-term perspective are very rich, and moving money going back into sustainable growth stories. And which is where I think India really comes into play. So India has had a biggest underperformance versus all the emerging market peers and versus the benchmark MSCI emerging market in the last 15 months. But I think all of that is I think that will reverse this year. And as the AI trade reverses, I certainly concur with some of the other guys that money will come back to India because India is a more secular growth story versus a theme-based or a cyclical growth story for a period of time that has been driven by AI trade.
Okay, so we're talking about the AI trade. Pankaj is talking about how resilient India could be from here on and an investment destination as well. But thank you, Pankaj, so much for joining in. Always a pleasure to speak to you. But before we slip into a short break, let's quickly address the European markets as well, because if you see in terms of opening, it's a very interesting open with major cuts coming in that range of 1% on the FTSE. You have CAC and DAX, both of them are down nearly 1.75 to nearly 2%. And if you see in terms of the US futures as well, all trading under pressure from Dow, S&P to NASDAQ with cuts of over 1% coming in there. We'll take this conversation forward as well as to what next for us. But let's quickly step into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a
Alright, you're watching India Market Close, and there's of course pain in the market, some recovery but large pain. Now one of the reasons is what's happening in the Strait of Hormuz. Now you will be hearing people speaking unendingly about the Strait of Hormuz. We thought we'll show you real time what's going on right now. So this is a website which gives you satellite imagery of real time traffic in the seas, and you have to zoom out and look at what's happening here when it all kind of goes blank. Now this is that area, Hormuz. Bandar Abbas is one of the key Iranian ports, and this has been under a lot of firing and attacks as well. You can look at some traffic. All of these dots are actually vessels. Now if you zoom out, you will see that the traffic sort of just ends here. It just completely ends here. After this, there is no way for people to get out, and then you have maybe some of it recovering over here. Now this huge patch and this sort of traffic jam in the seas that you're seeing is where everything is stuck. The rest of the space gives you a sense of how this is more or less normal. But here is where things start getting stuck, and then you have open seas. Now this is what the problem is, and why is it? Because this is the only sea passage from the Persian Gulf to the open ocean. It's one of the most important choke points and a primary export route for Gulf producers. 20% of the world's daily oil consumption depends on it. The percentage is even higher when it comes to India, and it links the Persian Gulf to the Indian Ocean. Any blockade will drive oil prices up. And like I said, over 2/3 of India's oil imports pass through it. Now technically there is no blockade. The Iranian agencies have come and said, we haven't blocked it. But when it's so unsafe, no one's going to insure it. And we heard from Maersk. Maersk is one of the world's largest sea liners, and we heard from them. And they also talked about how, as a precaution, they have decided not to let anything pass over here because insurance has just gone through the roof. It's not become feasible. It does not remain feasible for Maersk or any other major liner to come in and actually move their ships through here. In fact, Maersk has said they're suspending all vessel crossings at the Strait of Hormuz until further notice. They've paused future trans-Suez sailings through the Bab el-Mandeb Strait as well, and they have rerouted around the Cape of Good Hope. Here's where it gets tricky, because obviously you're sailing for more time, the cost of transport becomes much, much higher. So this is where the pain now emerges, and you can real time see that no matter what anyone is saying, this part going blank is showing you that there is effectively a blockage at the Strait of Hormuz right now. Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, joining in for more on what we can see. And in fact, Jyoti tracks the defense sector. As we're speaking about the geopolitical impact, there's many aspects to it, Jyoti. There's trade, there's insurance, and of course there is defense. Now the thought is that defense spends will go up. From the Indian perspective, is there more scope in terms of valuations or upside for Indian defense stocks?
Good afternoon, Tamanna, and thank you so much for having me on the show. So, see, if you isolate this war from the general business as usual for the industry, I think the index is currently 10% off the peak. We believe that there could be selective buying interest, particularly in the defense stocks with exposure to missile systems, drone, anti-drone technologies, precision strikes, and surveillance capabilities. However, the sustainability of this buying momentum will largely depend on the longevity and intensity of the conflict. Now, if tensions escalate or persist, it could support continued investing interest in companies linked to missiles, UAVs, and advanced defense electronics. If the conflict de-escalates quickly, we may not see a significant or sustained wave of buying beyond short-term tactical trades. Additionally, we expect Q4 earnings results to play a key role in driving investor sentiment. Strong execution, order inflows, and export commentary in Q4 could provide a more durable trigger for the next leg of sector performance. So, if you ask me, is there a headroom for further growth? Yes, there is.
Okay. So, Jyoti, you're talking about, further opportunities that could lie for these Indian companies as well. Now, my question to you is, what happens in terms of execution? Because you talk about order books, but the key concern comes in when execution is delayed. Do you think Indian companies do have that bandwidth to execute at this level, so that they are able to actually convert this order book into revenues?
Of course. In fact, I would rather say that 20s, in fact, from 24 onwards, it's a takeoff stage, and FY27 would be the starting of the year where you see a lot of companies actually picking up pace of execution. So, as far as I know, the way the companies have scaled their production capacities over the last 1 year, in fact, 15 months, it's been is admirable. And I'm sure that the kind of orders that they're sitting in, current orders itself, which are quite large, they should be able to execute over a period of 3 to 5 years.
What are your top picks, Jyoti, in the defense pack? Because that really is the only space which has seen, some, I would say, spots of green.
So my topics have since the start of financial year FY26 has been HAL, BEML, data patterns, and solar. Now, if you see, data patterns has already touched our targeted price of 3,000. So I think we should. I think we could sell off and re-enter maybe at a better point, starting point for data pattern. But this company is exceptionally doing well in terms of the way it is IP driven. So I see a lot of potential for data patterns. HAL, of course, you've seen a lot of negative incidents happening and has actually brought down the stock. So actually, at this price point, I see HAL great, an entry point for HAL. In fact, people are concerned that whether execution would still be a concern. I think second half of FY27 would actually see much better, execution. In fact, the engines, while the company says 20 engines, I think 12 to 14 engines we should be able to receive. We should receive in the second half, and therefore execution should not be a concern going forward for HAL. And Q4, I'm a little optimistic that possibly the company would give a good numbers in the fourth quarter. BEML, of course, they will deliver some 9 trains by the end of this financial year. So we should expect some 4-5 train sets being delivered. And next year, I think the pace of execution should. Actually, it will pick up pace for BEML. So yeah, BEML overall I see doing very well. And solar, I think it is something which has been delivering consistently. So I think more of a stable scenario for solar. But Bell is one which is long-term compounder. I must say the way they are executing and the pace that they have, the stable pace that they have maintained for execution is remarkable. So this is another stock which I'm very positive on in terms of I mean, any entry point for Bell is a good point.
Okay, interesting names there in terms of topics, but thank you so much, Jyoti, for joining in. Always a pleasure to speak to you and get your views. And I think in multiple conversations, Tamanna, everyone has spoken about BEL as one of the topics when it comes to defense, when it comes to execution today as well. So I think that's going to be one of the counters that is seeing good amount of accumulation. But let's also get in Amit Goel. And we have Siddharth Khemka who are joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Amit, my question at this hour is, with the kind of recovery that has come in terms of markets, one, any quick reason that you have as to what's leading to this recovery? And number two, what would your top picks be in terms of BTST, STBT? I know tomorrow is a holiday, but from a Wednesday trade perspective.
So my BTST would be to play Holi tomorrow and not carry any long or any short trades and enjoy the season. I mean, this is one festival that one should enjoy without a worry what is happening in the markets. So yeah, having said that, on a lighter note, see, if you look at the broad market and if you look at the history of war and conflicts versus equities, I have done a small study which I'll quickly give a summary. Anticipated and unanticipated conflicts have had very, very different and stark results. So anything which was anticipated, which was already in the news or sort of baked it into the price, and once the bomb has actually dropped, there is a phenomenon called, buy the bomb drop. So in my opinion, in my understanding, yeah, if the budget low holds, which is 24,587, if those levels hold, this is a good opportunity, good entry point for anybody who was waiting for a dip into the market. This is that dip. If this and the price action also kind of validates my point. So this anticipated conflict is an opportunity for the markets to for investors to try and go long if the budget low holds. So this is the broad view on the markets. In terms of if somebody still wants to buy some stocks for BTST sort of a trade, MCX and Nalco are the two stocks which are on my radar. If you were to see the kind of price action on both, on Nalco specifically, technically speaking, it is a Morugozu candle, which is essentially open low and close high. So it is trading near the high of the day with positive gains of about 2.5%. with very strong volumes on the relative strength as well. So keeping a stop of about 341, one could look at targets of about 385, 390 and thereabouts. This is on Nalco. The final stock, which I feel is a good entry point, is MCX. I mean, with this uncertainty in the short term, one could expect increased volumes on the bourses of MCX on account of gold and silver, which gives us a good opportunity for us to enter MCX also. Even this is moving up strongly with about 2.5% gains and with strong relative volumes. So a stop of below 2,400 and a target of nearly 2,600 would be a call on the BTST.
Got it. I mean, very quickly, 30 seconds though. I heard you say it's a good time to try and go long. Are you going long or are you not?
Yeah, we are advising our clients to go long at this point.
At the current point of time. Okay, good to know that. So, well, this strength is being bought into. Amit Goel is actually saying that. Keep in mind, tomorrow is a holiday. The markets are on. So, be into the Nifty trades if you are not a too risk averse a trader. Siddharth, I wonder what is the dealing room or what is the view been at the dealing desks of Motilal Oswal? Have people largely been shying away from buying, or was there some frenzied buying at the lower levels because the markets have recovered really smartly in the last 40 odd minutes?
Yeah, hi, Neeraj, good afternoon. So I think if you look at our dealing room, there were nervousness in the morning when the market opened a little lower. I think there were interest from a lot of large clients asking for our top picks and any opportunities to buy on dips. But there was not any frenzy buying that we have seen. I think it has been just the start of the war and people are still cautious. We don't know how things will turn. and there has been a lot of interest, especially in the sectors that benefit out of this. For example, I think you have been discussing a lot about the defense space. That is where a lot of buying interest has been there. The upstream oil companies, I think ONGC, Oil India types companies, there has been some interest there. I think barring that, we have also seen interest for some of our topics, largely domestic names, domestic focused themes or sectors where people are looking to add gradually in this decline.
Okay, that's the point. How do markets deal with war? And unfortunately, this is not the last one. It's not the first one. It won't be the last one, possibly. I'm going across to Sumit, who's put together this fantastic data on how every time there's been a war in the last decade, equity markets have responded.
So we have seen the data for the last 4 events that we have seen so far. Now, if you get the graphics, crude here is one factor where we have always seen an increase in the prices whenever there's a war type event. Libyan civil war back in 2011, crude prices increased by 25%. Iran nuclear sanctions, crude prices increased by 14%. Khorez attack that we had seen, that time also crude prices increased by around 15%, and when Russian invasion of Ukraine started, that time also crude increased by 32%. For all the other variables that we have seen, be it the Nifty, Indian rupee, FI flows and VIX, there have been divergent flows, but when it comes to crude, they have increased in all moment. Now if you look at Nifty 50, the first 2 events, that is Libyan civil war and Iran nuclear sanction, Nifty was up around 6 to 7% in both the cases, and rupee also appreciated around 1.8 to 3.3% in both the situation. When the attack happened in one of the Aramco refineries back in 2019, Nifty had fallen around 1% for a brief period of time. Rupee had depreciated by around 0.9%, and when the Russian invasion of Ukraine started, Nifty had depreciated or had fallen by around 6% while Rupee had depreciated by around 3% during that period of time. Now if you look at the FI flows and how the volatility index was, FI flows, again in the first 2 events, there were buy flows, $6 billion of buy flow coming in when Iran nuclear sanction was imposed, $2.6 billion of inflow when Libyan civil war started. And when it comes to the volatility index, that was up 25% during the Iran nuclear sanction. When there was the Libyan civil war, that time we had seen a decline in the volatility index coming in by around 10%. But when the Khorez attack happened, that time we had seen a very minimal FI outflow, just $0.1 billion. But when the Russian invasion of Ukraine happened, that time the FI outflow was massive, around 6.4 billion. But that was not only because of the war event, there were also multiple other factors that led to this FI outflow during the Russian invasion of Ukraine. And when it comes to the volatility index, 6% uptick during the attack, and Russian invasion led to 16% uptick in the India volatility index. Now we also went to the sectoral index performance similar to the benchmark. Major negative impact was seen only when the Russian invasion of Ukraine started. Consumer discretionary and financials dropped the most, while IT and utility were the only 2 indices that managed to stay in green during that time period.
IT and utilities. And, we were speaking this morning and Samir Arora said the AI threat is still the biggest one of all the threats that he's seeing. Siddharth Khemka, you said in the beginning of this conversation that you got calls from clients saying, what can we buy? What were you telling them?
So yeah, Tamanna, I think 2 factors. A, in the near term, we are looking at sectors which benefit from the war, as we said, the defense names and the upstream oil companies. But from a long-term perspective, what we are looking at is A, domestic themes that are not impacted by this geopolitical issues that we are seeing globally. And B, there is, rightly said by Samira, that there is a big threat of AI which has not gone away. And last week also we had seen market under pressure despite the war not being started. So there are certain sectors which are definitely benefiting out of the AI, which is where we are positioning for the next few years. So metals, we believe, because power demand is going through the roof, there will be a strong demand for copper, aluminium, and that is where supply will be a big challenge. And some of these companies which are fully integrated, I think that is where they will benefit. So copper-based industrial metals like copper and aluminium, that would be a key stock to look at from the next few years perspective. Power stocks, I think that will benefit a lot from this. And some of the domestic themes which are largely unaffected by AI is, for example, you have the banking, financials, insurance, auto stocks, largely domestic focus and untouched by the AI names, I think, the AI theme. So these are sectors and stocks where we believe one should position from the next 2-3 years perspective.
Okay, so, interesting picks that you're giving in. In fact, Jefferies has also given their top picks in this kind of a market along with the Morgan Stanley. If you just quickly look at all the topics coming in from Jefferies, again, the metal pack continues to be there. A lot of your energy names are there, your cement players, auto players, Bharti Airtel, these are few of the names that Jefferies has. And on a Morgan Stanley, names like Trent and Lenskart are making it to their list. Varun Beverages as well, probably it's the summer. L&T at lower levels, Prestige, Adani Power, these are few of the other topics coming in terms of Morgan Stanley as well. But moving on, we're talking about the aviation disruptions as well that are deepening amid West Asian tensions. The kind of flight cancellations that we've been hearing about when it comes to Indigo, even for that matter, Akasa Air has extended its Middle East suspension. Let's get in Danish, to tell us more. Danish, a double whammy coming in for aviation companies. On one hand, it's a loss of revenues, and on the other hand, it's the escalation of costs on the back of higher jet fuel prices. What are you picking up?
Well, that's correct. We are seeing that the entire global aviation industry is impacted because of the airspace closure over key parts of the Middle East as well as certain other areas. So because of this, like you very rightly mentioned, that it is a big double whammy for the Indian Airlines, not only for the global airlines, but if we talk about the Indian Airlines specifically, on first March, we saw that in fact the ATF prices have also been increased by 5,000 rupees per kiloliter on an average. So much before the overall impact of the crude as a whole, we are seeing that already the ATF prices have started to go up. But as far as diversions are concerned, over the past 2-3 days, Indian Airlines have cancelled over 1,000 flights. And if we talk about a specific few airlines, for example, Indigo has not only cancelled its operations to and from the Middle East, but also on select key European routes like London and Istanbul. Similarly, Air India is also cancelling certain key European routes as well. So one of the reasons why this is being cancelled is the fact that because of the whole Russia-Ukraine crisis, already the airlines were using another route to go towards Europe, but even that is impacted because of the entire Middle East tensions that we are seeing. So due to this, we are seeing that it is a very huge impact for the airlines. And as far as passenger facilitation is concerned, airlines are doing whatever the best they can. They're trying to accommodate passengers in hotels, but it is a big impact for the Indian Airlines, because if we talk about India, Indigo and Air India, these two airlines have big, deep aspirations to become global carriers, but their global expansion is happening at that point in time when there is a lot of airspace closure. And let's not forget that the airspace closure between India and Pakistan is also there. So because of that, it is a huge challenge for the Indian Airlines. Over the next few days, it is expected that the flight cancellations are expected to continue. So it's a big problem for the entire global aviation industry.
Sure, absolutely it is. But we'll have to wait and see till what extent it's impacted. Now, as far as Indian tourism is concerned, maybe airlines, as well as look at what was happening with ixigo, Yatra Online, some of those counters also taking a beating today, because a lot of Indians do travel in this region as well. Though some recovery now in an ixigo. And Indigo, of course, seeing that pain. Yatra 10% down. I want to pull up a SpiceJet. The only other listed player, though we already saw Indigo about 6% down. Would you see any recovery, Amit, in any of these counters in your travel kind of space?
Hi, Tamanna. No, I would not, attempt doing any sort of a value pick in these counters. SpiceJet has its own set of problems, so this is something I would avoid with a barge pole. The other airline stocks or the travel stocks for the time being are showing a lot of depression. I would not venture any sort of a value buying here. Nothing on these stocks. I would stay away for the time being.
Amit, can you hear me? Yeah. What would you stick your neck out and buy?
No, is my voice going on?
Yes, I can hear you.
All right. Yeah, so no, I would not venture out and buy and be adventurous in this sector and theme, that is the airlines and the tourism stocks. Maybe some of the tourism stocks, maybe some of the hotel stocks which are domestic focused, but nothing which are outward looking. especially not SpiceJet because of the kind of, it has its own set of problems. So with the other global geopolitical tensions also, it is adding on to its problems. So I would not touch the airline stocks. I would not touch the ticketing stocks, but maybe some of the hotel stocks could, be a value pick in this entire theme.
Any favorites?
No favorites. In fact, this is not a sector that I'm really very bullish on.
So what I'm getting from you, Amit, is that you don't want to buy anything right now. You're saying, "Mujhe Holi khelne do." Why is she asking?
Holi khelne do? Yeah, but I would, if you were to ask me about IT or about pharma, those are the places where I am looking to buy.
Name one pick for Wednesday.
I've already mentioned MCX and Nalco from the BTST space.
Okay.
So coming back to Nalco is something which has shown very strong momentum today. Morubozu candle closing near the day's high, relatively strong volumes. So this is my pick of the day. This is something where I would look to make some benefits.
Okay, thank you so much, Amit. Thank you so much, Siddharth. Have a great Holi. Say Holi hai, bura na mano Holi hai. Well, maybe that's what the markets are telling us as well. Don't feel too bad, we'll recover. Let's pull up where we're closing on the Nifty. Okay, 1.5%, nearly 330 points. 24,900 was lost in the carnage today. Some would say 1.5% is not too bad, considering that the hostilities have actually expanded. Iran has ended up bombing in some way or the other 7 sovereign nations. So considering all of that, maybe 1.5%, not too bad. The advanced decline ratio, though, showing you the bearish mood on the markets. Let's pull up the Nifty heat map as we see the closing bell details coming in. It's pretty much the same. Bharat Electronics is the only winner. Defense stock obviously takes it away. You're seeing metals doing okay as well. Sun Pharma, because pharmaceuticals always a safe space. ONGC because of crude prices, even that has actually come off from where it started off the day. On the losing side, Indigo, double whammy, right? Your crude prices, which is a major input, gets more expensive, and on the other hand you have to cancel a bunch of flights because of what's happening. Larsen & Toubro, Macquarie note outlines very clearly what the hit is to Larsen & Toubro because they have been expanding rapidly in this region, and you're seeing that pain throughout. This is a tough market. Nifty contributors will give you a clearer picture as well on how markets have been pulled down massively by Larsen & Toubro, Reliance and HDFC Bank. HDFC Bank has actually recovered from its lows. BEL, Hindalco and Sun Pharma on that other side. Broader markets also seeing the pain, the mid cap and the small cap coming in, you're seeing broader markets not really doing too well either. So the mid cap nearly 2% down, and the small cap index also nearly 2% down. The BSE 500 will also show you a picture of largely losers. Of course, there's some winners to talk about. Sterlite, Tejas seem to be, like I said, in some alternate universe of their own, and Muthoot Finance as well. Easy Trip, Reddington, Birla Corp, some of the top losers.
And I think the key over here was, Tamanna, everyone was of the opinion that in spite of the weakness, the correction that we are seeing in the markets, this would be an opportunity to buy. So don't be very sad. It is Holi, and it is going to be time for us to celebrate as well. So I think all the viewers, Bura na mano Holi hai, and try making your profits also pretty well in trade.
You have to return the favor. So I suppose all said and done, we have to find a way to celebrate even in tough times for the markets. Maybe the color we come back with on Wednesday should be green.
Green, yes, it should be green. Right now we've reused orange, which is still very neutral, but hopefully we come back with the green on Wednesday with things cooling off, and I think that's going to be something we should be watching out for. But coverage in terms of the war situation, the tensions, the impact not only from a markets perspective but even from a humanitarian perspective is something that will continue.
All continues. But thank you so much for watching India Market Close, and a happy Holi to all of you.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
watching Market Express with me, Shriyanti Singh, and this is the show that's going to get you a snapshot of everything that is happening right now, be it headlines or what's happening with the top buzzers of today. But let's first talk about markets in terms of West Asia tremors that were felt on the Lal Street today as benchmarks saw sharp cuts in trade amid heightened volatility. Nifty found crucial support. When you talk about that 25,600 level to bounce back from lows to end near 25,900 as well. When you talk about Sensex, that's also tanked over 1,000 points, while broader markets also saw deep cuts coming in. India VIX also saw a strong move as the volatile index hit the highest level since June 2025. Let's also talk to you about the sectoral picture then. That was largely a weak day of trade that you're looking at. You do have war volatility that is really driving your headlines, and the markets right now impacting the key sectors as well. So travel stocks were the biggest drag, followed by oil marketing companies, which were under pressure as well on the back of elevated crude prices, which we will be talking about in just a bit. But on the winning side, on the flip side, you did have defense stocks that outperformed in a rather weak market amid war sentiment. And speaking of the war then, explosive developments across West Asia as the Iran-Israel conflict widens sharply. The IDF has released new videos of strikes on targets inside Lebanon, underscoring that particular expanding front as well when you talk about Israel. Meanwhile, in the Gulf, you do have Bahrain that has reported a massive explosion, and that is moments after authorities confirmed a ballistic missile attack launched by Iran. Now, across the region, what you're looking at right now is a shockwave that is really continuing, with blasts lighting up Dubai and Doha as well, signaling just how rapidly this particular war right now is spilling across borders as Tehran's retaliation intensifies and US-Israeli operations as well continue. The Middle East now finds itself in one of its most volatile moments in decades, and the commentary coming in
from leaders is very clear in that there is not going to be any resolution to this conflict anytime soon. Let's also talk to you about aviation disruptions back home then that are deepening amid this particular tension as well, this particular conflict that we're talking about. Indigo has cancelled about 162 flights, suspending all services and to and from the region that I'm talking about till noon, including London, Heathrow and Istanbul and Manchester as well. When you talk about Akasa Air, that has extended its Middle East suspension as well till March 3rd, and SpiceJet that has also extended flight cancellations till 3rd of March. Let's also talk to you about West Asia's skies remaining thick with the dark clouds of widening war as well, because you do have Israel-US strikes and Iran's sweeping retaliation continue to redraw the region's fault lines. And today, you do have Tehran's first forceful political response since the killing of its supreme leader. Senior Iranian statesman Ali Larijani emerged as the face of defiance, and speaking to state media, in fact, he's delivered a chilling warning, calling the assassination an assault on the nation's very soul. They stabbed the heart of the nation, and I quote him here, their heart is going to be stabbed to, end quote. This is the pledge coming in from him. And he's also signaled that Iran's counterstrikes across Kuwait, Bahrain and Qatar were only the beginning at this point in time, dismissing reports that Tehran sought talks with Washington. Larijani, in fact, declared bluntly that Iran will not be negotiating with the United States under fire, raising fears that this conflict, already regional in scale, could veer into an even more dangerous phase. Let's also talk to you about who's named as the interim successor at this point in time, because you do have Iran that has named Ali Reza Arafi as the interim successor to long-time Supreme Leader Ali Khamenei. And when you talk about Ali Reza Arafi, he's been named to an interim leadership council that includes the president and head of the judiciary to be at the helm of the country until a new permanent leader is selected. It came after the United States and Israel claimed to have killed Khamenei in a wave of strikes on Saturday against targets in Iran, which sparked swift retaliation, of course, by the Islamic Republic. Let's also talk to you about a historic power vacuum after the killing of Supreme Leader. When you talk about Iran, attention is now fixed on a handful of men who could shape the country's future at this point in time. So at the top of that list is Mojtaba Khamenei, the Supreme Leader's 56-year-old son, a behind-the-scenes power broker with deep ties to the IRGC, but lacking senior clerical rank and facing strong resistance as well to a father-to-son succession. Now, another contender that you're talking about that we've just mentioned, Ali Reza Arafi, you're talking about the head of Iran's seminary system and former Guardian Council as well. You are talking about a respected figure in terms of his administrative skills, but not considered a political heavyweight at this point in time within the security establishment, of course, and also in the mix is Mohammad Mehdi Mira Bagheri as well, a hardline cleric. You're talking about him who was in his early 60s, known for ultra-conservative views and deep opposition to the West, and Hassan Khomeini, the grandson of the Islamic Republic's founder, carrying revolutionary legacy but little political influence and previously barred from high office as well. Back in 2016, as the Assembly of Experts deliberates behind closed doors, you do have Iran entering a period of uncertainty with the balance of power between clerics and the IRGC likely to decide the country's next supreme leader. Let's also talk to you about a major escalation of the regional conflict then. Saudi Aramco has shut down its Ras Tanura refinery after the facility was hit by a drone. Now, a little bit of background for our viewers when you talk about this particular refinery. It's one of the largest refineries in the Middle East with a capacity of 550,000 barrels per day. The bottom line is, built in 1945, Ras Tanura is not just an industrial complex. It is the heart of Aramco's export system, a real-time barometer for global oil flows, and one of the most strategically critical energy assets anywhere in the world, the largest in what the West calls the Middle East and what we call West Asia. Let's also talk to you about an important update pouring in right now. IRGC claims to target Netanyahu's office. Fate of Israeli Prime Minister is currently unclear, and that is the commentary coming in from IRGC. IRGC is also claiming to target Israel Air Force commander, and those are some very important developments that we're looking at unfolding right now. We'll keep getting you some more details when it comes to this one, but for now, what is clear is that there's a claim being made by the IRGC in terms of targeting Netanyahu's office, and the fate is something that we'll be getting you some more details on as and when they unfold, but that's the latest coming in. Let's also talk to you about PM Modi saying that the situation in West Asia is deeply worrying and India firmly stands for peace and stability. Speaking alongside visiting leaders, he's also stressed that all conflicts must be resolved through dialogue and diplomacy, not escalation. Now, the Prime Minister has also said that the government is closely tracking developments and working with countries in the region to ensure the safety of Indian nationals. And that's some key commentary coming in as far as the Prime Minister is concerned. Let's also get you an update when you talk about prices. Take a look at oil first, because oil markets are in full-blown turmoil, with crude posting its biggest surge in the last 4 years as traders assess the fallout from the effective closure of the Strait of Hormuz. Now you're talking about the world's oil artery as well. The narrow corridor that moves nearly 20% of the world's oil is the Strait of Hormuz for you. The Brent crude, that's rallied as much as 13% to its highest level since January 2025. Later paired some of these gains, but still trades more than 9% higher on the day. The spike comes as OPEC Plus agrees to raise output quotas by roughly somewhere close to 206,000 to 260,000 barrels a day next month. And this is a move that was slightly faster than expected when you talk about the pace as well. Though spare capacity remains confined to Saudi Arabia and the UAE, limiting how much the cartel can offset disruptions. Quick check on the disruptions that I'm talking about as well. More than 40 supertankers carrying millions of barrels are idling inside the Gulf as insurers pull war risk coverage, underscoring just how fragile global energy flows have become as conflict escalates. Let's also talk to you about global shipping giant Maersk that has halted all vessel crossings through the Strait of Hormuz indefinitely as security concerns escalate across the Gulf. The company has also paused trans-Suez sailings via a key route, and you do have them rerouting key services including ME11, MECL as well around the longer Cape of Good Hope, while cargo acceptance at this point in time for the West Asian area remains open. You do have this particular shipping company warning of delays and schedule changes at Arabian Gulf ports, and they're also saying that crew and cargo safety is paramount at this point in time. It will resume normal routes only when conditions allow. And even as markets stumble, global brokerages stay confident on India. Jefferies remains overweight on 22 stocks backing leaders. So you're talking about HDFC Bank here, Axis Bank, SBI, Bharti Airtel. Those are some of the counters that make it to their radar. The brokerage also sees strength in industrial and energy names. So you're talking about JSW Steel here. Something like an Ultratech Cement, Coal India as well makes it to their radar. And alongside, you do have Morgan Stanley. The message is in fact clear. Use the dip to focus on quality, not panic. Let's keep it going with brokerages. Morgan Stanley also remains firmly overweight on India. The brokerage flags 10 high conviction names on its focus list, cutting across autos, retail, banking and infrastructure. From consumption plays to core industrials, the message is quite clear right now. Quality leaders remain the preferred bet even in volatile markets. Let's also talk to you about UBS initiating coverage when it comes to Grow with a neutral rating, and a target price of 185 rupees is what you're looking at here. The brokerage calls Grow a compelling platform and India's largest retail investing APP, but just that the current valuations, when you zoom in on those, they limit near-term upside as well. And they are also expecting non-broking revenue streams to power the next phase of growth really, while operating leverage could steadily lift margins. Moving on then, Adani Enterprises steps up its defense push. Its arm, Adani Defense and Aerospace, is going to be acquiring a 14.2% stake when it comes to Airworks India Engineering. Now, the company has also signed a business transfer agreement with Punch Lloyd to also acquire its defense unit at Malanpur. And this particular move, when you talk about this one, it's strengthening Adani's presence in aerospace and defense manufacturing as well. Let's also talk to you about Rain Industries that has posted a sharp year-on-year profit improvement in the third quarter, even as sequential numbers soften. When you talk about their consolidated revenue, in fact, you're looking at a rise of about 17% thereabout to somewhere close to 4,300 crore, with EBITDA more than doubling as well to about 504 crores. Margins expanding nearly 5 percentage points. The advanced materials segment struggling with the EBITDA down about 60% due to seasonal softness and higher labor costs as well, while cement volumes are affected by extended monsoon in South India. Let's also talk to you about Tejas Networks that has rallied 55% in just 3 sessions after 6 months of underperformance this one. Now, even though it remains down nearly 50% from its 52-week high as well, this is a surge that you're looking at that follows a strategic 5G deal with Japan's corporation as well. And strong trading volumes is what you're looking at when you talk about Tejas Networks. Incentives under India's PLI scheme backed by Tata's Panaton Finvest as well. The company is aiming for global 5G contracts while also managing inventory and execution risks. Let's also talk about the shares of Fino Payments that fell sharply in trade after MD and CEO Rishi Gupta is arrested under the CGST and SGST Acts as well. The panic eases after the bank clarifies that the probe relates to certain program managers, not the bank's own compliance. Now, a quick board response and management, in fact, that really helps steady sentiment, but it was quite a fall that you were looking at when it comes to this particular counter. Let's also talk to you about Mahindra Group that is rationalizing its global portfolio at this point in time. The company is exiting its agri-machinery business in Japan as part of a sharper capital allocation strategy. Mahindra will step away from Mitsubishi Mahindra Agricultural Machinery and plans to cease operations by the first half of financial year 27. The group says that the move reflects a disciplined approach to long-term value with a structured transition and continued support when you talk about its customers in Japan. Let's also talk to you about Bharti Airtel that is signaling growth and shareholder focus at its investor meet. The company is planning to steadily increase dividends and invest heavily in data centers, targeting over 1 gigawatt capacity. It also aims to scale up its financial services business to reach millions of subscribers while keeping strategic control of its Africa operations. Now, when you talk about Airtel, they're expecting average revenue per user or ARPU to rise and says that competition remains limited given the steady sector growth at this point in time. Let's also get to the brokerage verdict when you talk about Bharti Airtel. Citi is maintaining a buy rating when you talk about this counter with a target price of about 2,380 rupees. In fact, the brokerage is saying that the chairman's strategic vision is making Airtel a compelling long-term story, while near-term catalysts, when you talk about this one, are going to be limited due to tariff uncertainties. The stock's recent underperformance offers an attractive buying opportunity at this point in time. Positive implications are also expected for Indus Towers. Let's also talk to you about some more brokerage notes pouring in when you talk about today. JP Morgan is staying bullish when it comes to Dixon Technologies, even as the stock has slid over the past months. Now, the bank maintains its strong outlook and targets, saying that uncertainty around the mobile PLI 2.0 is not a major worry anymore, and much of the risk is in fact already baked into the buy priced in. It also sees potential upside if the PLI support is extended or refocused on local component manufacturing and exports. Let's also talk to you about Hindalco Industries that is facing margin pressure as the used beverage scrap prices in fact jumped nearly 20%. Prices moved to around $2,586 a ton from somewhere close to $2,100, squeezing margins to $500 per ton from the previously $670. Now, notably, you do have Novelis, Hindalco's key unit that uses over 60% of recycled aluminium in its production, making it sensitive to scrap price swings. Let's also talk to you about DGTR launching a countervailing duty probe into PVC suspension resin imports from China after complaints by domestic manufacturers. The investigation alleges Chinese exporters benefit from government subsidies, potentially leading to retrospective duties. Now, India imports over half its PVC resin from Beijing, and domestic PVC prices, when you talk about them as well, They bottomed somewhere close to December 2025, having rebounded and are expected to remain firm from here on, offering a positive outlook as well when it comes to local plastics pipe makers. Let's talk to you about the two-wheeler sales in the month of February, showing strong momentum with major players reporting strong growth as well. Now, Hero MotoCorp leading with just that nearly 44% growth coming in. TVS Motor Company posting over 30% growth. Eicher also contributing with heavy double-digit gains as well, reflecting strong consumer demand across the segment. Let's also talk to you about some more details that are pouring in right now, because you do have a bunch of updates that are pouring in terms of the headlines when you talk about Iran as well. But when you talk about the PVs, when you keep going with Motown as well, you're looking at passenger vehicle sales also maintaining a healthy growth trajectory in the month of February. Maruti Suzuki growing about 7%, Tata Motors and Mahindra posting gains of about 35% and 19% respectively. Hyundai, when you talk about this one, also seeing steady growth, highlighting a broad-based recovery across private vehicles. Let's also talk to you about commercial vehicle sales that are maintaining a robust growth in the month of February, reflecting post-GST rate cut momentum. Tata Motors on gear, while VECV as well is posting somewhere close to 23% growth as well. The data suggesting sustained demand in freight and logistics segments when you're reading the fine print. Onto the primary markets then. CleanMax Enviro Energy Solutions made a weak debut, listing at a roughly 10% discount to the IPO price. The stock opened at around 960 rupees, and that's on the NSE, and 952 rupees on the BSE, compared with the issue price of somewhere close to 1000 rupees per share, meaning that initial investors faced an immediate notional loss that you're looking at, and the IPO itself, when you talk about that as well, so muted subscription with particularly weak retail interest. The listing suggests that investors are turning more valuation sensitive. Let's also get you some more business news then. India and Canada have inked major agreements covering critical minerals and uranium supplies. Bilateral ties continue to warm. The pacts aim to secure long-term access to minerals essential for electric vehicles, batteries, semiconductors, and clean energy tech as well. On uranium, the deal could also bolster India's nuclear fuel basket, supporting power generation really, and also energy security. Officials from both sides, in fact, describe the agreement as forward-looking and mutually beneficial, reflecting deepening cooperation beyond those traditional trade lines. Onto Amazon Web Services, that has temporarily shut down one of its data center zones in the UAE after unidentified objects hit the facility, causing sparks and a fire. Now, power was cut as firefighters moved in and services linked to that zone went offline. This comes at a time when the region is already on edge after Iranian missile and drone strikes across the Gulf. When you talk about Amazon Web Services, they're saying that other zones are operating normally and restoration work is underway. Onto some national news then. Kashmir is under strict restrictions after large protests broke out over the killing of Iran's supreme leader. Authorities, in fact, have sealed key areas in Srinagar, including Lal Chowk, and tightened security across several districts. Mobile internet speeds have been reduced. And when you talk about schools as well, they've been shut as a precaution. Officials, in fact, are saying that the curbs are temporary at this point in time, aimed at preventing any flare-ups as emotions run high in the valley. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Turmoil in West Asia intensifies as Iran's IRGC claims to target Netanyahu's office. Meanwhile, Israel's IDF says it has eliminated the senior member of the Iranian Ministry of Intelligence and the main intelligence body of the Iranian regime. Prime Minister Modi reacts to tensions in West Asia, says it's a matter of deep concern, adds that India supports the resolution of all disputes through dialogue and diplomacy. Market ends over 1% lower. Nifty closes below 24,900 after recovering over 260 points from day's low in the last hour of trade. Broader markets underperformed the benchmarks today. Oil prices rise sharply on the West Asia turmoil while Brent trades at $79.4 per barrel. WTI crude climbs more than 8.5% to over $72 per barrel. Government calls for an urgent meeting with the shipping sector to discuss the impact of war on logistics and freight rate, as they are expected to go up by 20 to 30% in the view of West Asia situation. Airlines cancel 2,500 flights globally amid tensions in West Asia. Over 1,000 flights suspended by Indian Airlines since the 28th of February. SEBI Chairman Tuhin Kanta Pandey tells NDTV Profit that the recent regulatory measures on derivatives need to be evaluated through data before any further action. Says the concerns must be seen in context by hyperactivity in weekly index options being the key focus. India and Canada sign a $1.9 billion of uranium supply deal as India tries to expand its nuclear power generation. Also signed 3 MOUs on critical mineral cooperation, promoting the use of renewable energy and cultural cooperation. A very good evening to all our viewers and welcome to NDTV Profit. This is Nisha Podar and you're watching Profit 360. Today we start with focusing on the US-Iran tensions. The violent tension between the two countries has affected international relations, alerted the central government and pressured the domestic markets. We'll give you details from all three perspectives, but first let's start from the latest on the war. Well, Iran continues to reel from the US-Israel strikes. While there is no official assessment of the losses or the operational impact, Ayatollah Ali Khamenei's Iran's supreme leader was killed, remember, on Saturday. That was a big development. However, this has only intensified tensions and retaliatory measures from Iran. This has, in fact, added to the fears that the conflict could spread as Tel Aviv launched the attacks on Lebanon and American air base in Kuwait, as well as vessels in the Indian Ocean. Now, over the weekend, on the Middle East countries were attacked, including those of Bahrain, Qatar, the United Arab Emirates, Kuwait, Jordan, and even Oman. Let's go across to my colleague from NDTV, Disha Bagchi, on the latest developments coming in from the Middle East tension.
Breaking news coming in, absolute huge development, an escalation in the tensions that we're seeing in the Middle East, where now the Iranian Revolutionary Guard is claiming to have targeted and struck Israeli Prime Minister Netanyahu's office, as well as the location of an Israeli Air Force commander. Now, this is absolutely a huge development in this conflict that we've been seeing since Saturday. Now, after a day after Israeli strikes successfully targeted and killed Iranian Supreme Leader Khamenei, now Iran's Revolutionary Guard has claimed to have targeted Israeli Prime Minister Netanyahu's office, even going as far as to claim that the fate of Israeli Prime Minister Benjamin Netanyahu remains unclear. Now, this is a big statement and a big claim coming from the Iranian Revolutionary Guard. However, we must take this claim with a pinch of salt, because let's remember that these are claims that are being made by Iran and Israel. Across the last couple of days, we've been seeing multiple claims being made, but it is important that these claims are also verified. So far, we do not have any confirmation or verification through visuals of whether indeed Iran was successfully able to target the Israeli Prime Minister's office, because remember, Israeli Prime Minister's office is a well-guarded area in Jerusalem, while we have been seeing that Iran has been targeting various locations in Jerusalem over the past couple of hours. Even when I went to Jerusalem earlier last year in December, we saw that how strongly guarded Israeli Prime Minister Benjamin Netanyahu's residence and Israeli Prime Minister Benjamin Netanyahu's offices. So it is definitely a very difficult target to strike. However, now the Iranian Revolutionary Guards have claimed to have successfully struck Israeli Prime Minister Benjamin Netanyahu's office. However, we need to still confirm this. They have also said that they have targeted an Air Force commander from Israel. We are yet to understand who this Israeli Air Force commander might be, but definitely now heightening the stakes in this escalating conflict in the Middle East that we've been seeing over the past couple of days.
All right, that was Disha Bagchi reporting on the latest developments coming in the Middle East tensions. Now, Prime Minister Narendra Modi has taken a clear stand on the ongoing tensions in the Middle East. During his India-Canada joint press conference today, he emphasized on promoting peace and stability. Adding to this, he also said that the government will continue to work closely with all the countries to ensure the safety of all Indian citizens in the region. Let's listen in.
विश्व में चल रहे अनेक तनावों को लेकर भारत की सोच स्पष्ट ही है। हमने सदैव शांति और स्थिरता बनाए रखने का आह्वान किया है, और जब दो लोकतंत्र साथ खड़े होते हैं तो शांति की आवाज और भी सशक्त हो जाती है। पश्चिम एशिया की वर्तमान स्थिति हमारे लिए गहरी चिंता का विषय है। भारत डायलॉग और डिप्लोमेसी के माध्यम से सभी विवादों का समाधान का समर्थन करता है। इस क्षेत्र में मौजूद सभी भारतीय नागरिकों की सुरक्षा के लिए हम सभी देशों के साथ मिलकर काम करते रहेंगे।
All right, Prime Minister Narendra Modi there emphasizing the need of dialogue as well as diplomacy for global stability. Let's now take a look at also the Indian markets which closed lower today. The benchmark indices were battered and beaten as Nifty ended below 24,900, down over 1%. The losses were largely dragged by Interglobe Aviation and L&T, both stocks plunging about 5% in trade. The broader markets tanked furthermore and underperformed the key benchmark indices today. On the sectoral front, Nifty Auto led the pain with just defense, metals and pharma ending in the green. Remember that last hour of recovery really abetted the situation. Otherwise, the market was weakish throughout the trading session. In fact, let's take it straight across to my colleague Jasmeet for a roundup on today's market action. Jasmeet.
Nifty ends in red, closes below 1% in today's trade amid the US, Israel and Iran conflict globally. While in terms of the overall benchmark, we see that the benchmark and broader market both have seen pressure in today's trade. While Interglobe Aviation and L&T are the top Nifty 50 losers, down about 5% in today's trade. Small cap 250 and mid cap 150 are also in red, down about 1.5% in today's trade. While 3M India and Rail Vikas Nigam are the top losers in Nifty mid cap 150, when you look at the small cap angle, we do see that Railtel Corp and Eddington down over 6% in Nifty small cap 250. In terms of the sectors, we see that most of the sectors ended in red, barring Nifty Metals and Nifty Pharma, the only two sectors in green. While Nifty Auto is a top losing sector, down about 2% in today's trade, while Motherson and Uno Minda both down about 3.5% and becomes the most losing stocks in Nifty Auto in today's trade. While in terms of the overall trend, we say that Nifty Auto is in red for the second consecutive day in a row, while Nifty Realty and Nifty PSU Bank are in red for second consecutive day as well. While in terms of overall other angle, that's Nifty Energy, Nifty Bank and Nifty Pharma, even those ended in red note today. While Nifty Financial Services in red for the third consecutive day, while Nifty IT tanks in trade again and snaps its 3-day gaining streak and ends in red in today's trade. All in all, we see a negative picture in today's market as market ends on a negative note.
All right, market today ending in a negative note, and there was a lot of volatility throughout the trading session. Now, sounding off the alarm on the potential long-term impact on Indian stock markets, well, Samir Arora of Helios Capital told us simply that he is not worried. He said in his experience, conflicts like the Iran-US war have settled within a few days and that the markets are cold-blooded, meaning that they recover fast without much pain. Listen in to a brief portion from our conversation that was held earlier today.
Broadly, I would think that this will end plus minus a few days, or at least there will be negotiation. And negotiation, I think President Trump has tweeted or said that already, I don't know who, but in the hierarchy, somebody is already asking for a new round of discussions. So I don't feel this is, super bad from a stock market point of view. And if it is bad for a few days, it is very difficult to sell today and then buy back 2 days later or 4 days later. Believe me, I have tried this all my life. I've been a hedge fund manager for 20 years. These things don't work.
All right, so that was about the market. Another impacted space is the crude space, and oil prices, they jumped sharply today after US and Israel attacks on Iran disrupted the global energy supplies. Brent crude rose 9% to 79.41 barrels per day, and this highest in 7 months, remember. US crude called WTI, remember, climbed 8.6% to 72.79 per barrel. And the primary reason is that the war has effectively stopped ship traffic through the Strait of Hormuz. Remember, this is a key route for about 15 million barrels of oil every day. And Iran has also fired missiles in response, hitting US and Israel sites and even attacked 2 ships in the strait. So US President Donald Trump said that the strikes on Iran will continue until all goals are met, and they could last for weeks. Experts warn that without quick peace, oil prices will stay high or rise more. Now, this is already pushing up the costs for petrol, food and goods worldwide. Listen into a comment made by Jonathan Barrett, the CIO of ETO Markets, from a conversation we had earlier today.
Looking at the price of the inputs, because you have India, which is reliant on imports, you have China, you also have Japan. So the discussion and the strategy from the states is trying to get the states to be, and Donald Trump said it, to be the number one in the world. So this is more, in my mind, a strategic move for Trump to become and maintain number one, and also to deflect interest away from the US domestic market, where we know there are problems. So protracted supply, Straits of Hormuz closed, this will go on for some time.
All right, so the oil prices remain as a big concern, but also remember that the Strait of Hormuz is a key oil checkpoint linking the Persian Gulf to the Indian Ocean. Over 20% of global oil and 2/3 of India's imports really pass through it, and that is a key connecting point. Hence, the disruption in this particular strait is really spiking the crude oil prices for us. Let's take it straight across to my colleague Tamanna with more details on this impact.
You will be hearing people speaking unendingly about the Strait of Hormuz. We thought we'll show you real time what's going on right now. So this is a website which gives you satellite imagery of real-time traffic in the seas. And you have to zoom out and look at what's happening here when it all kind of goes blank. Now this is that area, Hormuz. Bandar Abbas is one of the key Iranian ports, and this has been under a lot of firing and attacks as well. You can look at some traffic. All of these dots are actually vessels. Now, if you zoom out, you will see that the traffic sort of just ends here. It just completely ends here. After this, there is no way for people to get out. And then you have maybe some of it recovering over here. Now, this huge patch and this sort of traffic jam in the seas that you're seeing is where everything is stuck. The rest of the space gives you a sense of how this is more or less normal. But here is where things start getting stuck, and then you have open seas. Now, this is what the problem is. And why is it? Because this is the only sea passage from the Persian Gulf to the open ocean. It's one of the most important choke points and a primary export route for Gulf producers. 20% of the world's daily oil consumption depends on it. The percentage is even higher when it comes to India. And it links the Persian Gulf to the Indian Ocean. Any blockade will drive oil prices up. And like I said, over 2/3 of India's oil imports pass through it. Now, technically, there is no blockade. The Iranian agencies have come and said, we haven't blocked it. But when it's so unsafe, no one's going to insure it. And we heard from Maersk. Maersk is one of the world's largest sea liners, and we heard from them. And they also talked about how, as a precaution, they have decided not to let anything pass over here because insurance has just gone through the roof. It's not become feasible. It does not remain feasible for Maersk or any other major liner to come in and actually move their ships through here. In fact, Maersk has said they're suspending all vessel crossings at the Strait of Hormuz until further notice. They've paused future trans-Suez sailings through the Bab el-Mandeb Strait as well, and they've rerouted around the Cape of Good Hope. Here's where it gets tricky, because obviously you're sailing for more time, the cost of transport becomes much, much higher. So this is where the pain now emerges, and you can real time see that no matter what anyone is saying, this part going blank is showing you that there is effectively a blockage at the Strait of Hormuz right now.
All right, so that was about the Strait of Hormuz and its importance currently. Now, the government called an urgent meeting with exporters and the shipping amid escalating concerns over the Middle East situation. Commerce Secretary Rajesh Agarwal chaired this particular meeting with soaring freight rates and logistics disruptions topping the agenda. Now, exporters say that perishable shipments are already taking a hit, with major liners imposing conflict surcharges or suspending the bookings altogether. Let's take it across to my colleague Rishabh Bhatnagar to gather all the details from this crucial meeting and what are the measures being taken by the government to really contain the situation, Rishabh.
Right, the meeting, this very urgent meeting that was called over the weekend by the Commerce Ministry on, of course, the emerging situation out of West Asia. Happy to report that it started on time about 2:30. It has ended. We have spoken to one of the people that was in the meeting. Around 75 exporters as well as shipping sector representatives attended the meeting. What essentially this was a stock check and stock taking of what are the issues that currently are being faced by exporters. Of course, the issues that were pointed were that because of this spike in freight rates and the general routes and the usual routes becoming unsafe, what are the sort of measures that the government can now take? What exporters are telling us that the government is especially concerned about the cargoes, goods stuck around those sensitive areas, especially perishable goods such as fruit and meat. So the government is very concerned and they have taken note of that. The government has also taken and sort of spoken to the vessels that are stuck and carrying energy, who are carrying crude oil as well as other energy supplies. Those have also been contacted and their safety has sort of been talked about as well. What we're picking up is that very importantly, an inter-ministerial group has been formed on this matter to sort of explore the way ahead for this. And what we're picking up is that another meeting could be called on a very short notice in a similar format. This was, of course, hybrid, and such a meeting can be called on a very short notice, given the fact that this is a very evolving situation and things are changing by the second. So a lot of important updates coming in on from the commerce side of things for this war as well.
All right, Rishabh, thanks so much for all those important details. Government clearly taking proactive measures to avert untoward situations when it comes to our export market. And on the other hand, Inter-Ministerial Committee is going to really take cognizance of the matter. Rishabh also spoke to S. Ramakrishna of the Federation of Freight Forwarders Association in India. He told us that the government is working on mitigating the import-export through air, sea, and also listen in to the conversation on what really this means and the impact of it.
Fresh out of a meeting of the Commerce Ministry, talk to us about what the government is doing about the Middle East situation right now, especially to help exporters and shipping sector.
The Ministry of Commerce has just had a meeting with 63 stakeholders offline, and 10-12 of us in the online physical meeting. Government is really concerned and they want to help the importers and exporters where their cargo is stuck, where the perishable cargoes are stuck, how to mitigate the problem of both imports and exports through air and sea. They are also creating an inter-ministerial group where they have also given the mobile number and the email IDs where it can be they can be contacted, and it will be helpful to the industry. This is a very proactive mode. We are actually, it is generous of the government, and we are very happy about it.
So what was the conversation like when the impacted routes were being discussed in terms of the Strait of Hormuz being blocked or the Bab el-Mandab issue coming up? What are the sort of alternatives that the government is planning, and what are the sort of demands by the industry also coming up at this point in time?
As of now, they have taken the feedback from everybody, including the vessels which are stuck in the Gulf region, which is carrying the crude and energy. So they have taken the entire inputs. Now it is a question that they will all put their mind together and give kind of a solution. But one thing very good about is that they have realized there is a problem and the problem has to be mitigated. That's a very positive approach.
So lastly, before we leave you, any sort of next measures or next meeting that has been called by the government in this order?
Not as of now. Probably they have created a WhatsApp group and we are all part of that group. If there is on a very short notice, we will be called, and similarly hybrid as well as a physical meeting will be there. I think it will be a good thing to go forward.
All right, so that's the word coming in. But remember, a bigger impact is also that the global flight operations continue to feel the ripple effects of the spiraling West Asia tensions. With airlines worldwide forced to cancel and also reroute their services, Indian carriers too have scaled back operations, including the routes to parts of Europe. For a clearer picture of the scale of this disruption and what passengers can really expect, let's take it across to my colleague Danish for the latest. Danish, what's the latest that you're picking up? How many flights have been cancelled so far? I'm sure many Indians are stranded overseas.
Well, that's correct. Over the past 3 days, over 1,000 flights by Indian carriers to the Middle East and from the Middle East have been cancelled. Initially, the impact was only on the Middle Eastern routes, but now we are starting to see that this is also spreading to routes of Europe. So because of that, Indigo has cancelled its flight operations to Heathrow and Istanbul. Similarly, Air India has also cancelled several flights to parts of Europe. And one of the major reasons is the fact that after the Russian and Ukrainian war, and after the India-Pakistan airspace has been closed, the other alternative route was through the Middle East. But now, even since that is shut, we are seeing that no flights are actually, flying over that particular region. So, as a safety and precautionary measure, the flights have been cancelled. And in the past 3 days, it has been like the total number of flight cancellations has been around 1,000. But now, if this continues for the next few days, we can expect the overall flight cancellations to go up as well. And earlier in the day, Akasa has come out with a fresh statement, and they have said that the flights to the Middle East and from the Middle East have been cancelled till the 3rd of March. But if we talk about two bigger airports, that is the Dubai airport and the Abu Dhabi airport, so even over there, the flight cancellations have been suspended till the 3rd March, 3 p.m. Local time. So all in all, if we see the gateway to the west, which is the Dubai airport and the Abu Dhabi airport, they remain to be shut. And even the Indian flight, the Indian airlines are also cancelling flights to the Middle East and from the Middle East, and now also to parts of Europe.
Right, quite a chaotic situation when it comes to air travel globally. Thanks, Danish, for getting us all the latest. With that, it's time to wrap up on this edition of Profit 360, but do stay tuned to NDTV Profit. It's time to say goodbye.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji. Jingle, 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 jingle. Bas aaj ka. Jingle, 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 jingle. Chal kare thode. Single, 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 single. Kyunki tu hai. Single, 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 single. Baby, I'm your Santa. After the roaring success in Delhi, Hyderabad and Mumbai, The NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome to KYC, that's Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and focus on that one company that you need to have your eye on. It's a recent listing, True Alt Bioenergy as well, and it's an interesting one because, you know, not too much coverage in terms of analysts, but the space that it operates in terms of ethanol as well as the other key factors that the company might go into very soon, and we'll talk about that very, very quickly. But in terms of this particular very, very interesting stock, there are a lot of things to talk about. Now, EBITDA expansion is one of them. There are also multiple key expansions that the company is doing in compressed biogas, amongst others, that could be a key growth driver into the next 3 to 5 years. Now, ethanol as well as new verticals like CBG, as I spoke about, as well as SAF, are some of the ones that the company is expected to be a key beneficiary of with what we've seen currently as well. Now, apart from that, the company's deleveraging roadmap continues to be one of the major things that we talk about, because the debt has increased going into FY25 until that time. Now, since they have one of the key factors looked at reduction of debt in this IPO, we'll continue to focus on that with the management. Now, strategic joint ventures as well as newer partnerships, what could be those as well, because the company has struck an important partnership as well And this will be something that we ask them as well. But largely, these are all the factors that we're looking at for True Alt Energy as well. When you move on and look at the other key factors about this particular company, since listing, it has had a difficult time to say the least, because there have been some challenges, and we'll put focus on that in just a bit. But the company is engaged in the production of biofuels, with ethanol being one of the biggest factors in terms of the company's growth. Now, we've seen the revenue jump up quite a bit, but the primary focus is on this particular sector, and hence, given the national policies that we've seen, especially on the E20 as well for automotive sector, ethanol becomes a key growth driver, and True Alt, a key growth beneficiary, is something that we look at. The company is one of the largest producers of ethanol in India. Apart from that as well, we continue to monitor the newer spaces that they are going into as well. So compressed biogas is something that we look at, but for ethanol specifically, the installed capacity currently at 2,000 kiloliters per day. It becomes one of the highest ones in this space, and hence a lot more to focus and talk to the management on about all of this. Now, largely, of course, we will be speaking to Mr. Vijay Narani. He is the managing director of True Alt Bioenergy, and hence now a good time to talk about what will be some of the factors that we will be watching out for. Now, largely, income statement, balance sheet, cash flow, and if you are a regular viewer, you know this drill by now, and return ratios will be something we'll focus on. Also get you a focus on the shareholding structure, street cred, and unfortunately not very positive on this. Valuation as well as outlook are some of the key factors that we look at for the company at this point of time. But let's start with the income statement now. We spoke about the listing. It's not been too long since the company listed, just the last few months, but revenue accretion has been very, very strong for the company. Jumped from 762 crores all the way to 1900 crores. The EBITDA has also kept pace with, growing almost 3x to 309 crores. And profits subsequently have grown from 35 crores to 446 crores. When you also look at the Q3 performance, largely a very strong revenue base, but here you see the concerns. Now, EBITDA hasn't kept pace with the revenue in Q3 of FY26, and hence margins have slipped materially from 30% to 18.8%, while the profits have also dipped, and hence we've given this a neutral rating for now. While the history suggests that the growth momentum should continue, Q3 and the latest quarter shows you some concern, and hence we'll come to that in just a bit. The margin trajectory very visible in terms of the upward momentum, but Q3 should have seen a much higher accretion in that sense. So continue to monitor that and ask the management on the same as well. When you look at the balance sheet as well, let's look at this perspective very quickly, because you've seen that the cash levels has been something that the company has been targeting to increase as others as well. So from 23 crores, there's been a 10x jump in cash as well, but the borrowing number has been stable at roughly around 1500 crores. So what could be the deleveraging strategy will be something that we'll ask the management. The company's book value as a whole has grown by 7x, given by new capacity that has come in. So you've seen the revenue jump 7x. You've seen the book value also keep pace with that at this point of time as well. So that's largely on balance sheet. In terms of the book value, while positive, the borrowing number is something that we continue to focus on. Concerns on deleveraging is something that we'll talk about. So hence a neutral rating yet again. But on cash flow, that's the other key aspect. Now, because of the profits that have generated, that's clearly visible in the company's cash flow from operations as well. So it had that blip in FY24, big jump in FY25 yet again, with a profit of also around 146 crores in FY25, shows you that ratio of almost 200% on a steady state basis. Will this continue? Will be something that we'll talk to them about. Net cash flow has also materially jumped. So clearly a thumbs up from this standpoint for this KYC rating as well. Return ratios is the other key aspect. Now, in FY23, the company's return ratios were around 27 odd percent. That jumped to 28.2%. So hence, the return of equity is largely a big thumbs up from this standpoint as well. And hence, given this a thumbs up clearly. Shareholding largely stable at 70.5% as well from the management, because we've seen that there was, of course, the selling in this particular IPO, and hence the shareholding has come to 70.55%, very stable in that sense. But you see that there has been not too many foreign investors who bought into this story as of yet. Maybe a key domestic play, but the domestic institutional investor share also limited, and maybe because the promoter hasn't sold too much in this particular IPO is something that we continue to monitor, because the stock is down 25%, and hence public, the retail investors like you and me have bought into this counter right now. But largely something that we continue to monitor, and hence a neutral rating for now on the shareholding as well. The street cred is what I was talking about. Not too much since the company listed, not too much time that has passed, but stocks down up almost 3% in terms of the 1 month performance. But since listing, the stock's down almost 25%, and hence there's not too much in terms of for us to talk about in terms of the street cred at this point of time. Valuations become key at this point of time for the company as well. Now, it has peers like Balrampur as well as Triveni Engineering amongst others. So for all the three companies, you do see the valuation largely stable at the 22 to 26 times price to earnings. And hence we've given the company a thumbs up on this aspect, because while there has been a 25% drop in the company's share price since listing, now at this point of time with peers and a higher growth, this becomes a very interesting counter is what True Alt Energy is. In terms of outlook as well as the final key parameter is what we track, the company has specifically mentioned in terms of outlook that there are some key things to watch out for. Ethanol business, largely a very steady business. So you will see the all plants of the company are running at a steady state pace, and there will be no new capacity addition. So you should see return ratios improve from this point on as well. When you also look at the other key aspect, which is the compressed biogas, now that will drive the company's growth outlook going forward, and hence you should see those newer plants that are coming in be a next growth opportunity for the company. Apart from that, SAF is a big long-term project for the company. Returns will come later, so you might see that the benefit coming in from the ethanol business might be diluted at this point of time from SAF, but the share of ethanol should continue to boost the company's parameters. Fuel retail, very small business on a day-to-day basis, but expanding at a steady pace as well. So hence, largely is what we see, and profits should improve as plants run smoothly. Time now for the final ratings of what we give it in terms of the KYC. Neutral rating for both income statement and balance sheet, while cash flow and return ratios continue to show that positive momentum. In terms of the shareholding, that's largely stable and neutral in that sense at 70% shareholding from promoters, but lesser in terms of the foreign investors, and hence a neutral rating there. But valuation and outlook, the two big factors that we focus here on KYC, seems to be a thumbs up from that standpoint as well. So overall, we're giving the company a 5.5 out of 8 for KYC's stringent parameters in this show as well. But largely, let me welcome in the guest for today, Vijay Nirani. He's the Managing Director of True Alt Bioenergy at this point of time. Mr. Nirani, very good morning, sir, and thanks so much for joining in today. Largely, let me start off with, for quarter 3 specifically, because we did see that the margins came down in this particular quarter and the profits were impacted on a YY basis, while the revenue has kept pace with the growth. Could you give us some perspective of where do you see ending in FY26, both in terms of margins as well as in terms of profits? If you can give us some perspective of what investors should expect at this point of time.
At the outset, thank you so much for having us and for covering us. We are relatively a very young company, like you said. We just have about 2.5, close to 3 years of existence so far. And I think God has been kind, the markets have been kind. We have a very good business to demonstrate. Energy transition, and again, sustainability through social reforms, that is to empower farmers. So we get to do all of that, which is very, very exciting. So in terms of the company so far, we had only the first business vertical that was in operation, which is manufacturing of ethanol. And in the ethanol space, we had 5 ethanol plants. The 5th one just got recently commissioned. It got the consent to operate as recently as December. So with that, we are now operating a full 2,000 kiloliters per day capacity. And if you remember, in the last Q2 of this current financial year, we had taken a conscious shutdown of the plants to integrate 3 of our 5 ethanol plants into grain field or making it dual feed. Now our capacities are fully geared up to operate on a 300-day basis. That is the expectation. And coming forward, we have other verticals also that should give us a lot of growth momentum. But to your question, sir, on how we end this quarter and how we end the financial year, times have been good for us. The prices of raw material, that is grains, has gone down drastically because of the oversupply of grains and underutilization of capacities across the country. So that is giving us a lot of margin expansion. And we are looking at a peak operating capacity right now, and almost at a rated capacity into 80-85% of capacity use on 90 days is what we are projecting. So that is what exactly we should be achieving this quarter.
Got that, you, Ms. Nirani, and largely, very well explained as well that, in terms of dual feed, and I'll just come to that in just a bit. In terms of, where we've seen this year, in terms of the revenue profile of the company, you are roughly hovering around the 1,100-1,200 crore mark, and last year you've done 1,900 crores. Now for quarter 4 in March 2025, you did about 900 crores in terms of revenue. So should we expect that this year you should at least end at roughly around 22 to 2,300 crores in terms of revenue? Would that be a fair estimate?
I would say our targets are a little higher than last year. And we are sort of on track to probably achieving that as on date. And we just left with another 30 odd days, and to be precise, 29 odd days. And we should be closing a little over the last year's last quarter mark.
Something that we will be working with, of course. And do you expect that now that all those plants have gotten commissioned, your 3 out of 5 plants have become dual feed as well? Do you see that we could see actually a margin surprise compared to last year, because you were roughly at around, in the same time last year, 17 to 18% margin in quarter 4 specifically. So could we see that quarter 4 could be a big jump, 25 to 30%, and hence you could see that margin growth for the year come back?
So two things. If you look at my last quarter, that is Q3's results, we only operated for about 58 odd days, close to 59 days, let's say. In that, we could achieve a good revenue growth as well as a margin of almost upwards of 15 to 16%. We had a lot of costs that we had to bear during the period, and a few of our capacities were also being commissioned. Now for Q4, all of them are done with, and our grain plants are also in operation as we speak. Especially on maize, the margins are much higher because we usually predicted maize price to be somewhere between 22,000 rupees a ton to 24,000 rupees a ton, whereas the market today stands somewhere around 18,000 rupees a ton. That's a huge delta which we never expected. That is going to demonstrate a big growth in the bottom line on the margin front. Without quoting a number of on what percentage of EBITDA we should be reaching, it should be somewhere on the let's say about a historic EBITDA so far that we've achieved. That's all because of the price of raw material.
Got it. So definitely that 4,000 rupee delta will be a big factor to watch out for in quarter 4. I just wanted to come back to the business now, because we've spoken about financials a little earlier than I anticipated. But on terms of the business, now you spoke about the dual feed aspect. Now 3 out of 5 plants are already dual feed now, as you mentioned at the end of quarter 3. Talk to us about the benefit and what it actually means for our investors, because while TrueAlt, a recently listed company, we've not spoken to you too often. So if you can understand and help us understand the meaning of dual feed and what it does for you in the future.
So typically we earlier operated on a single feed, that is the derivatives of sugarcane, that is sugarcane juice, B heavy molasses or C heavy molasses. So this is one family of raw material that we used to consume. Now we have added pre-fermentation, we've added a few equipments that allow us to consume rice or maize. So at any given time, I can consume sugarcane juice, B heavy molasses, C heavy molasses, or I can consume rice, maize, or any damaged food grains. So this makes it, the family of grains and the family of sugarcane derivatives are considered dual in nature. So they're two different roadways to achieving ethanol. And we now can do both of them in 3 of our plants, 3 of our big plants.
And Mr. Nirani, in terms of the benefit, now you mentioned 3 out of the 5 plants can do the dual feed. So uninterrupted supply of raw material as well as some benefit of the volatility that you might have seen otherwise from just that single raw material, you get that benefit, and that's very well understood. What will it mean for the business in terms of financials? If you can explain us that as well, because how the margins for all commodity businesses is very volatile. If you can give us some perspective of how we should look at that in terms of the benefit of dual field coming into margins.
Absolutely. So what we now have is the possibility to be, flexible in consuming any kind of grains. And the biggest opportunity in ethanol business right now in the current framework is that ethanol has different prices and they are fixed for the whole year. So our finished good, there is no dynamics on the cost. So I don't have any, to stock up inventory and sell later. There's no problems like those. Whereas the raw material has a huge dynamic. I mean, there's a huge delta in the prices. Usually during the harvest period, the prices of rice, maize, or sugarcane is quite low. And during non-harvest period, the prices go up. So, and each year, if the rainfalls are very good, then we get good sugarcane and we get good rice. If the rain is less, we get a lot of maize. So every year the dynamics change. And by us being dual feed, we will have access to different kind of feedstock irrespective of rains or no rains, right? So that gives us the flexibility in terms of availability. Now, in terms of the pricing, each of these commodity has a different price structure during different months of the year. And for us to have that assessment and procure the right raw material at the right price is the skill that the operators will really have, because your cost of conversion is almost at a highest efficiency. Your finished good is at a fixed price. All that you're left with is your skill on procuring the raw material at the right price. So that's exactly what benefit that we get by being dual feed.
Got that view, and I appreciate you helping us understand that a lot easier as well. So I appreciate your understanding on that. But on compressed biogas, that's the next big opportunity, right? We've seen one of the leading players in terms of energy and the company with the largest market cap also opening a lot of CBG plants. If you can give us what is True Alt doing in that sense, and how far are we in terms of that coming into the revenue? So if you can give us some medium-term projection also, that could be fine. But what is the benefit of True Alt entering into this space? Because you have the benefit of the 5 ethanol plants. That's a steady state revenue. You are going into this new venture as well. So talk us through the rationale.
So CBG is the next big disruption that the government of India is fully geared to achieve. And True Alt wants to participate in that in a very big way. We have targets to invest close to upwards of about 1,200 to 1,400 plus crores in the next 2 years in the CBG space itself. And we have 2 joint ventures, one with Sumitomo Corporation and one with GAIL, Gas Authority of India. And both of the places where we've already commissioned the construction, 4 of our plants have now begun construction. 6 of the GAIL plants will begin construction as early as maybe last week of March or first week of April. That's the target that both GAIL and us are holding to achieving it. Now, CBG is a phenomenal opportunity especially for True Alt. In our perspective is that I have sugarcane press mud, which is absolute waste right now. And I've got spent wash, which is a byproduct of ethanol making. So both of these products give me a lot of flexibility on procuring or buying raw material. And that gives me the flexibility to run the plant at a big scale because I have assured feedstock available. And CBG is a very interesting business because we are achieving, substitution of 3 major products that we import. One, India is a net importer of fertilizers. We import close to 70% of our fertilizers. Through the CBG business, our residual waste after extracting methane becomes organic fertilizer, which we give to the farmers. And again, India imports close to 60% of its gas. And our per capita gas consumption is very, very low. So consuming these organic waste and converting it into CBG and into fertilizers is a very, very important subject for Government of India. And True Alt is participating it in a big way.
Got it. So there is, multiples to this step. So from organic waste, you will be going, of course, into manufacturing CBG. And from there also, you can use that residue going into fertilizers. Got that point. How quickly is your timeline of those 6 plants with GAIL as well as the other joint venture as well? So if you can give us some perspective of when is it expected to operationalize, and also in terms of what it does for return ratios, because there will be some hit on the return ratios at the start, but your ethanol plants have also given that benefit and will give that benefit in FY27. So how should investors look at both these aspects?
So on the CBG, good thing for us is that we have been operating CBG since almost 4-5 years now, and we're one of the early movers. And if you look at a compressed biogases the performance in the last 3 quarters, we've been achieving an EBITDA of upwards of 60%. And we've been achieving a PAT of close to 45 to 50%, which is a huge thing, which I would only presume that very few or very limited sectors can actually give. So we had the benefit of early understanding on the project. A lot of the companies that are doing CBG, including the one large company probably that you referred, they're still in the learning curve. And we are now replicating the learning that we had in our first plant. So in terms of numbers, we have got 4 plants of 20 TPDs each. That could give us a revenue of somewhere close to about 300 to 350 crores at full capacity on an annualized basis, which will commission by July of this year. That is 2026. So Q2 of this year, we will start seeing some revenues from the 4 plants. These are under a joint venture with Sumitomo Corporation. And the ones with GAIL, these are 6 in number, and we're spending close to 470 odd crores of capex on those plants, and target to achieve somewhere about 400 crores of revenue on an annualized basis. But those will be commissioned only by the Q3 of next financial year, or November of 2026. So we'll have at least about 10 plants that will be commissioned, hopefully within this calendar year. That's the target that we carry. And one good thing here, sir, is that this whole business, the revenue or the capacity utilization or ROE, ROC entirely depends on your skill to sell. Because gas can't be stored. If you're unable to sell it, then you'll have to flare it, which is a revenue loss. So because we've got good partners like GAIL, who is who's the principal of all kinds of gas trade in India, they have assured us the offtake guarantees. So that gives us confidence that we will be able to achieve capacity utilization from year 1 itself.
Got it. So very important point that you talk about, Mr. Nirani, that you have that benefit of GAIL being as a partner. But just very quickly, dissecting what you told me, 300 crores of revenue at full capacity from the Sumitomo plant that will start in July of 2026. So could we anticipate at least 200 crores revenues in FY27 from this plant? Would that be a safe assessment?
We wouldn't have that high of an expectation, but since it's year 1, we usually plan to have, target to achieve at least about 50% on the remainder days of operation. So, 50% of, let's say, by July, if we commission, we'll have about 270 to 80 days in hand, the number of operational days. On that basis, we would have somewhere about, we should target somewhere about 120 to 140 crores of revenue. That's the target that we would carry.
And when I look at the medium-term opportunity as well, Mr. Nirani, and that probably would be my final question, you've seen a very big jump in revenue from FY23 going into 25, where almost 900 crores. Now, largely a lot of that is coming from ethanol. So when I look at the medium-term opportunity for FY28, would it be safe to say that you will be clocking in at least double of the current revenue that you're doing, or at least a close figure? And margins will subsequently be at least at the level that we've seen historically at the FY25 level, given that you will have a couple of years, 3 years. So by FY28, you anticipate roughly around 4,000 crores of revenue and margins of at least 25%. Would that be a fair assessment?
If you ask the entrepreneur in me, I am really doing this, I would tell you that we've been literally growing at a 55% growth rate since 2023, since our first year of operation. And, from 723 crores in revenue we grew to 1,240 crores in revenue the second year. Then we grew to almost 1,970 crores in revenue the third year. So this year also, we would actually in line to achieving that kind of a revenue growth, say 55% of revenue growth. But unfortunately, in the state of Karnataka, we had excessive rainfall during this monsoons, pre-monsoon, post-monsoon and monsoon were quite heavy. So our construction time on the grain integration, it got delayed by close to 2.5 months. And, a month I can achieve almost about 5.5 crore liters of ethanol. And that 2.5 months would translate into almost 12 crore liters of ethanol. So that, disruption, slowed down the growth for this financial year. But it was again a very conscious decision that we took, and again, it was a one-time delay that had happened. We are sure that the growth rate should be in tangent to what we have achieved in the last 3 years. That is the target we hold. And all these, the new revenue growth, or rather the business growth, will come in from 3 verticals in principle, rather 4 verticals.
Right.
One is capacity utilization in ethanol. 2 is the new CBG businesses that are coming up, almost 22 CBG plants, 23 CBG plants in the next 2 years.
Right.
And we'll have SAF giving us revenue starting FY28.
Right.
And right now we also have the fuel retail verticals. We, in fact, we are one of the, we got authorized as to be called as an oil marketing company.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
You're watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani. Now, over the last few years, investors have kind of poured money into themes, credit, hybrids, as well as tactical strategies. India's mutual fund industry is now going through a kind of reset for a lot of these mutual fund categories and rules. Now, from redefining credit risk to kind of tightening thematic launches and introduction of life cycle funds, SEBI's latest categorization circular kind of just doesn't tweak products, it kind of reshapes how portfolios will be built, marketed and kind of understood as well. To decode exactly this and what this means for investors like you and me, I'm joined by Radhika Gupta, who's the MD and CEO of Edelweiss Mutual Fund, joining us now. Radhika, thank you so much for taking out the time. My first question to you is from a broader lens perspective, right? This circular coming in, is it more about risk control? Is it more about investor protection? Or is it the next phase that the industry maturity is going to see going forward?
I think the circular has I see the beta points of the circular as twofold. One is more focus on schemes being true to label, investor protection, and that is all reflected in how credit funds are classified, the whole overlap around sectoral and thematic funds. I think all of these are steps towards saying arbitrage funds, saying that do what you say and say what you do and be very, very clear about that. And the label should be the actual. So I think that is one lens. The second is I would call a opening up of the market to reflect, or opening up of the category to reflect new realities. So for instance, in many hybrid and equity categories, the residual portion now can be REIT, InvIT, gold, silver, etc. It just doesn't have to be fixed income. There's the introduction of a new life cycle class. So that second part, I would say, is a one-time reopening up of mutual fund categories to give additional flexibility to reflect new capital market realities. These are the two meta themes, I would say, that have come out.
So then, Radhika, I just want to get a sense. Would you put this, as SEBI moving from kind of product proliferation to portfolio discipline? Because I think there are multiple problems that, through this circular that SEBI is trying to solve, which is alpha dilution, mis-selling. There's also category cluttering that is happening. Do you think that reading is correct?
I would say it a little differently. I would say rather than product orientation, more solution orientation. So rather than just having a suite of products, being very, very clear about why individual products exist, what purpose they will solve, as I said, matching the label that they have, and really focused on a solution and need-oriented selling rather than just having products for the sake of products. I actually think the circular, if done right, can lead to a lot of thinking and a lot of innovation also.
Got it. There's also, just talking about, line item wise now, they've also said that you can now run both value and contra funds with a 50% overlap cap. Does that create a genuine style differentiation? Or do you think this is just, kind of branding separation that, they're kind of trying to do? How does it, make this different?
So they've done it in two places. They've done it in the value and contra category. They also used to have either balanced or aggressive hybrid. In the hybrid category, they've said you can run both. But what they've very clearly done is define the amount of overlap. So in value and contra, you can have 50% overlap. Now, theoretically, if you want, value and contra can be run as very different strategies. Value is really picking up peak value companies. Contra is trying to do something that's against market cycles, and those don't have to be traditionally value-oriented companies. So while there can be similarity, if you were to run it differently, I think there can be differences of approaches. The critical thing here is, I think 50% overlap is a very, very good criteria. So that will make sure that you run your value and contra fund differently. Again, the criteria for aggressive hybrid and balanced hybrid is also very, very clear. So that will make sure that you run them with a different risk return profile.
With regards to the limiting of thematic launches to an kind of AMFI notified list is what they've said. Now, this, do you think, is an attempt to curb the narrative-driven product launches during the bull cycles? Is that the aim here?
So, I think it's an attempt to simplify, because finally, themes can be themes. Anything can really be a theme. But the idea is to make sure that if one is launching a thematic fund, and there's nothing wrong with not launching thematic funds. I have them. The industry has great thematic funds. It is something new that you're bringing to market. It's not a copy of something else that you have. So I think the spirit is extremely well intended on thematic launches. Too many funds from any AMC or from multiple AMCs, especially now so many AMCs, also makes things extremely confusing for the consumer. So I think it's an attempt to simplify the number of options for the consumer, and also force asset management companies to say, if you're putting out something new, is it truly distinct from the basket you have? You already have.
Got it. The introduction of sectoral debt funds with 80% in AA+, and this I want to, and above, right, do you think is kind of encouraging credit segregation to prevent another credit event spillover? Do you think that's the aim here?
I think it gives you more categories in debt, although if you were to ask me my honest opinion on this, beyond liquid and money market, I think post-credit crisis, I don't think you've seen any growth in fixed income category, particularly after the change in taxation. So while it's well and good that we have a few more categories, How much these categories will be structurally used, I'm not sure. And I think even with the fact that we have more categories finally, given the liquidity of credit markets in India and the fact that you run daily liquidity open-ended structures, is this suitable? Is there, an ALM comfort here? I think that time will tell, and is there investor demand? So I think on this time will tell.
Understood. For hybrid funds, they are now allowing exposure to InvITs. There is exposure to ETCDs, also gold and silver ETFs as well. Do you think this is more towards multi-asset standardization? And I think it will make it more dynamic?
I think this one is particularly fabulous because historically for two reasons. One is historically, if you wanted real ETCD exposure, you only had the multi-asset category really to do the use of gold and silver. And it's not really fair that one category is the only one where you can take commodity instruments. I think bullion now is a very, very mainstream asset class. So the ability to put it into multiple hybrid funds basically means that everything is kind of a multi-asset fund in nature. I think the restriction on gold and silver, the flexibility on gold and silver is not just for one category, it's for the whole hybrid category. There's also, an interesting element of bullion or commodity-based arbitrage that can be explored in many of the hybrid fund categories. I think REIT and InvIT is a class that is growing. The government has talked about it. The regulator has talked about it. And I think this class really lends itself well to hybrid funds because REIT in itself is a hybrid instrument. So all of us already use them given the limits in our hybrid funds, but now we have a little more flexibility.
Got it. They've also introduced life cycle funds with fixed glide paths. Now, when I was trying to understand this from a lot of people, there were mixed reviews. I want to understand your viewpoint here. How are you viewing this as a product and what are the pros and cons that you're seeing?
Our view is not mixed. I think our view is clearly positive. We've been talking for a number of years about the introduction of this kind of category. We already had target maturity funds, which we started at Edelweiss MF, so why not target date funds? I do think retirement is one of the largest goals in India. And beyond retirement, I think life cycle funds now focus on goal-oriented investing. So many investors that I meet say, I want to invest, when do I redeem? And I think we have to, as a nation, orient investors towards more goal-driven investing. So with these 5-year, 10-year, 15-year, 20-year funds, investors can pick a time horizon based on their goal, and the fund will automatically rebalance your asset allocation from equity-heavy down to fixed income heavy. Say you want to educate a child in college 10 years later, you can pick a 10-year life cycle fund, start your goal very aggressively, and as that college education comes closer, the life cycle fund will be conservative, and all of this will happen in a tax efficient way without consumers needing to worry about rebalancing. So I think this is a great category. It really orients us towards goal-driven investing.
But the other side of argument for life cycle funds is that the idea of lock-in for this fund, right? The whole idea about mutual funds is with regards to liquidity. And secondly, these, I believe, would tend to be slightly more expensive. So how do you differentiate this from, the other fixed asset classes?
So I would say two things. One, I don't think they've imposed lock-in. They have said exit load. Now, exit load is actually a very, very good thing. And I think they've only said 3-year exit load. Anyway, if someone is an equity investor, they should be talking 3 years, 5 years, ideally 7 years. So I am actually, and nobody is saying these are closed-ended funds, so people can remove money. But here we are talking about someone who's investing for 10, 15 years, and we just want to make sure that there's a little bit of cushioning at the beginning so that they give the corpus that time to grow, because equities can be volatile over 3 years. We all know that. As far as expenses, I don't think the expense structure here is going to be different from a regular equity or hybrid fund. I'm sure it's going to fall into the current equity or hybrid caps, and as these funds scale with PER, the size is going to come down. So I don't think it's going to be more expensive than a regular equity and hybrid fund. And given the features and the fact that you save so much in terms of taxation on rebalancing, I think this ends up being very good for a consumer.
Understood. Okay. Got your point on that, Radhika. For foreign securities, they've said that they'll not be treating this as a separate asset class. What is SEBI exactly trying to signal here? I mean, what is it that they want to, kind of try to do here?
I assume that line is in the context of multi-asset funds or funds where they're saying you need to have at least 3 asset classes present. Now, one argument could be my asset classes are domestic equity, domestic fixed income, and foreign equity. SEBI is saying here, no. Foreign equity or domestic equity, you're still equity. So if you need a third asset class, that has to actually logically be commodities. So I think it's a small point to signal that. Anyway, by the way, the foreign limits for mutual funds have been closed for a long time because of RBI restrictions.
Got it. One last question to you, Radhika. If you were to design the next core category under this framework, what would you see as the biggest structural opportunity? Is it life cycle funds, sectoral debt, or disciplined hybrids?
Life cycle.
All right, Radhika, thank you so much for taking out the time and helping us understand this particular circular and helping us decode that. Thank you so much.
Thank you.
Okay, so we did talk about the new mutual fund categorization with Radhika Gupta. Now, shifting focus to another topic, which is also a very interesting one, because everybody today probably have a gold or a silver ETF in their portfolio, and there's a change happening there. Now, SEBI has gone out and changed the way how mutual funds will now value physical gold as well as physical silver. Now, what does this actually mean for investors, and what does this actually mean in terms of valuation? To understand all of this, and to help us in fact understand all of this, we are now joined by Vandana Trivedi, who is the head of Passive's Axis Mutual Fund, joining us now. Vandana, always a pleasure speaking with you. Thank you so much for taking out the time. My first question to you is this development coming in. Help us understand as to, first of all, what is exactly that is SEBI said, and what are they trying to do via this?
Sure. Thank you, Mahima. Thanks for having me. What has SEBI said with respect to valuation of physical gold and silver held in various schemes? This does not apply only to gold and silver ETFs, but also to various hybrid schemes and multi-asset funds which are investing in gold and silver. So SEBI has said that while valuing, for the purpose of calculating NAV of these funds, while valuing the gold and silver, now you have to refer to the domestic spot prices which are issued by recognized Indian stock exchanges. So that's the requirement that SEBI has brought about. How is it different from the practice that is being currently followed by fund houses? So even now, when fund houses have been valuing gold and silver, what we have been taking is gold and silver prices, but these have been international benchmarks, which are provided by what we call as the LBMA, which is the London Bullion Market Association. And then we would overlay that with Indian realities, which is what is the landing cost finally in India, which means that we start with the international benchmark, then we layer it with our import duties, other various landing taxes, currency conversion, importantly. All of this would get layered over the international price benchmark. Now, SEBI has said, listen, let's not do that anymore. And you value it at domestic spot prices, which is published by recognized Indian stock exchanges. So that's the change, Mahima.
So, Vandana, I'm just trying to understand here as to why this move. I mean, what is the kind of aim that SEBI is trying to achieve through this? And how does this, kind of change things for somebody who's already invested in these ETFs or hybrid funds or any fund that is exposed to gold?
Sure. Okay. So what SEBI has tried to achieve via this change is what SEBI has been trying to achieve via everything that they're doing for the investors in the mutual fund industry, which is to bring about transparency, to bring about standardization. So essentially till now, while valuing gold and silver, we had the LBMA prices, and then we would layer that with a number of fees and taxes, and also put in our own estimation of the premium or discount that was prevailing in the Indian markets, right? Which meant that different AMCs could end up having different types of assessment while layering all of these additional costs over the physical gold or silver cost. However, now when SEBI has mandated that we move to the prices published by recognized Indian stock exchanges, what SEBI is doing is that it is standardizing all the Indian realities with no flexibility of assessment that's left anymore with any single fund house. So that's as far as the impact of it on, say, how the calculation will go on from now and how mutual funds will have to respond to complying with these new regulations, which are effective the 1st of April 2026. Now, most important question is, what does it mean for investors? What does it mean for you as an investor if you're already an investor? The earlier system was not flawed. Okay, the earlier system was as good as it could be. We are just standardizing with this new regulation or requirement as mandated by SEBI. For the investor, what does it mean? Does it change the number of units that you're holding in your gold ETFs or silver ETFs? No, it does not. Does it change any taxation element for you? No, it does not. Does it change your cost of acquisition for investments that you've already made? No, it does not. So for the investor, nothing changes. What it changes or what it helps the investor is, in future when you're comparing, say, two ETFs, then the NAVs that you're seeing for the two ETFs is standardized. There is no discretion element involved in terms of layering or arriving at the NAVs. So it is transparent, more transparent now, more standardized now, and therefore you can say it's also more comparable now. To compare between two ETFs, also, if you want to analyze the tracking error of any ETF, which is, as you would appreciate, is a very important concept that investors should be aware of while choosing ETFs to invest into. This gets the denominator in a way gets standardized, so it's far more easier and standardized to compare. So that's the change for an existing investor. It just does not mean any action that's warranted from them. It does not change the risk profile of these asset classes. It does not change the use case as a hedge of these asset classes. It has just standardized the process of calculating NAVs. That's all.
Vandana, I just want to understand, is there going to be change in terms of the holdings? Because the difference, I believe, will be kind of taken into consideration. Just because, you would be kind of tracking as to how the spot market in India is versus internationally. What percentage of change can one expect in their portfolio because of this for both gold and silver?
Okay, so let me put it this way. So when you're using the NAV to value your portfolio, right, the change that usually comes in versus when you want to compare the Indian prices to the international prices is the change that is brought about due to certain standardized factors. For example, import duty would be standardized, right, across all parties. Currency conversion metrics is standardized because currency is the same, right? It's USD versus, say, INR. What could change, however, is the seasonality element. For instance, Indian markets behave differently during certain phases. For example, when there is a wedding season in the country, when there is festivities like Diwali, Dhanteras, etc. in the country, when there is an India-specific premium that comes about in the Indian markets. Now, those are the times when there would probably be a difference in how the NAV is calculated. But I just want, for the benefit of your viewers, to share a very important distinction here. Now, when you as an investor, you want to add or buy, say, gold ETF in your portfolio, you're not doing it at NAV, Mahima. You're actually going to the market and buying it at current traded prices of that particular gold ETF that you're choosing, right? So essentially, your buy or sell decision on an ETF is at the ETF prices which are traded in the market. NAV has nothing to do with it. NAV is important from the standpoint of comparative analysis between a couple of ETFs in the same space, or for the purposes of tracking errors. So from the investor standpoint, to value your portfolio, you will use the NAV, and there that process has got standardized, but it isn't really changing the value as such of your holdings. Because even today, again, for the sake of, at the cost of repetition, even today, when we have been calculating NAVs for ETFs, we have been taking the Indian reality. We've been overlaying it to the international benchmark prices that we've been getting, right? Now, SEBI is saying that instead of you individually overlaying or estimating those cost overlays or the cost additions, if I may call it more simply, there is a standardized price that now you start using, which will be published by recognized Indian stock exchanges. So you're buy and sell decisions are really not going to get impacted because of this. Your valuation just becomes a little more standardized. I hope I've been able to clarify this for you.
Understood. I think now it's very crystal clear for me. Vandana, thank you so much, in fact, for that comprehensive answer. The other aspect, and I'm sure about this, but I'd still like to confirm from you. Do you think there will be any taxation change? I suppose not, because this will not take into consideration any of the factors that we consider for kind of taxing these ETFs or hybrid funds.
Not at all, Mahima. You're absolutely right there. There is absolutely no change to taxation, cost of acquisition, and nothing at all.
Okay, got it. Now, the other aspect is that, do you think that because of this whole development coming in, ETFs, bullion ETFs specifically, will see more inflows because of probably, I cannot put it as more transparency, but I think an easier way now to evaluate ETFs, right? Do you think there will be more inflows coming in?
Frankly, Mahima, if you ask me, I'm not sure that this is going to attract more inflows. If anything, it just gives more comfort while you're comparing or valuing your portfolio, right? But, I would only urge that, gold and silver or ETFs or any asset class for that matter has to subscribe to a certain asset allocation model that works for you. And therefore, to that extent, whatever allocations will come will keep coming. Just one other important thing that's happening in the world of gold, at least, is that there is seems to be a structural change that's underway because of various tensions across the world, etc., which is making people look a little more closely at these asset classes, which we may not have to manifest possession of these asset classes via the financial products route, which we haven't done very seriously as as an investing community so far. So to that extent, these bullion ETFs do now occupy an even more important space. So far it was in theory, in academics. Now it's actually getting executed by investors. And I think I'm just very, very glad that the regulator is working really hard to make this entire investment mode far more transparent and far more standardized, which is very important in the interest of the investor. So to that extent, it just gives a lot more comfort, I would think, to the investing landscape.
Got it. Vandana, thank you so much for helping us understand what this means for investors, as well as actually helping us decode as to what this move from SEBI was. So thank you so much for taking the time and speaking with us at NDTV Profit.
Thank you. Thanks a lot. Bye-bye.
All right, so there you go. We talked about two very important things, mutual fund categorization as well as the new update coming in for SEBI with regards to how physical gold and silver will be kind of evaluated for these ETFs and hybrid funds. Now, the other aspect that we need to consider, of course, is the war going on, right, in the Middle East. Now, because of that, a lot of commodities are seeing spikes. Crude is up today, was up around 10% at that $78 per barrel. Gold and silver also will see ripple effects of markets being under pressure. Now, to help us understand as to what's the outlook looking like for all of these commodities, we're joined by Shriyansi, who will give us the whole picture of the commodity space. Shriyansi, over to you.
Well, absolutely. A lot of headlines that you're looking at when it comes to commodities, and let's make sense of the prices right now. When you talk about oil, first things first, you're looking at an uptick of about as much as 13% as far as oil is concerned, to the highest since January 2025 as well. And when you talk about Brent as well, that has spared some of the gains, but still an uptick is what you're looking at on the back of the closure of Strait of Hormuz, which is about 20% of global oil supply. When you talk about other factors to watch out for, there's OPEC Plus in terms of the kind of commentary pouring in from them. So they're talking about that 260,000 barrels a day raise in terms of their quota as well. And they're also sparing the production capacity that is confined to just about Saudi Arabia and UAE. So that's a little bit of a caveat, the fine print that you're looking at when it comes to this particular OPEC Plus quota raise. But nonetheless, it's important to track more. Oil tankers are also gathering pace in the Persian Gulf as well. So you're looking at least 40 very large crude tankers as well, and that are still stuck in the Strait of Hormuz. Now, other than that, more than half of the world's largest insurers as well when it comes to the entire maritime space, they've in fact scrapped war risk insurance as well, given the kind of situations that we have at hand right now. Other than that, when you talk about gold prices, you're seeing quite the surge there as well, and no points for guessing that this is safe haven surge that you're talking about here, and it's advancing for a fourth straight day. When you talk about gold prices, investors are flocking to safe haven assets, and that's something that's important in terms of what it should be suggesting to you in terms of technical levels. It's the 14-day period that you're looking at in terms of the relative strength index that is close to 65. So that basically means that the overbought region is somewhere close to 70, and it is nearing that overbought territory, and that's what gold was doing in terms of the technical indicators as well. But all in all, oil prices surging and gold and silver as well soaring.
All right, Shansi, thank you so much for giving us that perspective with regards to where, of course, the commodities space go. But with that, completely out of time on this edition of Your Money Matters. But do stay tuned. More news and updates on the other side.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
One year at the helm of SEBI and Shri Tuhinkata Pandey has enacted changes that a lot of street would have been hoping for or waiting for. And I'm sure there are many more in the
offing. So here we are at Team NDTV Profit at the SEBI headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today. Now, when you took over, sir, I would presume that the docket for change was fairly loaded, and you've enacted a bevy of changes. If I were to ask you to think of how would you rate your tenure on the first 1 year, what would you say? One or two things that have been landmark for you, and one or two things that you, on hindsight, you might think maybe you could have done it differently.
Okay, I think first of all, it'll be difficult for me to self-analyze, except to say that the year was quite a difficult one in terms of the challenges that it offered. Normally the markets do require a certain amount of stability of policy. Of course, markets are also used to all kinds of uncertainties as well. But particularly the year gone was particularly beset with huge amount of uncertainty arising out of geopolitical developments, not only the wars and crises, but also tariffs in particularly, which were actually impacting a big deal, vast segment of Indian economy, Indian capital. On top of it, we of course had, as I said, that this challenge of a perception that we are over-regulating, and therefore we also had to really clearly put together a collective strategy of, optimum regulation based on, as I said on the first day, 4 T's, which is transparency, trust, and technology and teamwork. These were certainly enablers to achieve this optimum regulation. And all that I can say is that the teams, that is internally, that SEBI, that we have, and also the teams outside, which is the committees and the market participants and the industry and the investors associations and the proxy advisors, all of them have actually helped to put together a series of reforms, which I can call it, while we had one of the best primary markets in 2025 as number 1 in the world in terms of IPO, we also have year of reform in terms of regulations and simplicity and ease of doing business.
Just an extension or a related question, actually, wanted to ask that there is a perception that under your leadership, SEBI has taken a facilitative approach, of course, ease of doing business, clearing files faster, but critics, arguing that this may kind of build a latent risk. How do you want to respond to that?
So I think ease of doing business is not equal to more risk. This is a myth. Actually, the risk is the risk. Risk is to be measured in, the way risk is measured. Ease of doing business is where you are trying to achieve the same thing with less friction. So you are not really, reducing the goal. You are only saying that your goal can be very well done by a simpler way. If I may ask you a question, like if you have something overlapping regulations, more intensive, more micro regulations, how does it help risk management? Because you may be only thinking that you are managing risk, but you possibly could be creating more risks. True. Because if you are micromanaging many things, you are not perhaps paying your attention to the more riskier things in hand because you are busy micromanaging.
That's true. Sir, okay, let's try and focus on specifics. One of the things that always comes across when any average business journalist speak to the FinMin, to RBI or to SEBI would be, how is it that we can facilitate ease of investments by the foreign institution community? Because the big talking point of 2025 was that while EM saw a lot of fund flows in, India did not. Now, valuations may have been one of the reasons, but a lot of questions come about. I mean, this whole limit being taken from 25,000 to 50,000, some of the FPIs that we spoke to did say that it is maybe a bit onerous. Taxation may not be under your purview, but this certainly might be. And a lot of other factors. What is it that you reckon, sir, that SEBI can do and you would want to do in order to ease the processes for foreign portfolio investors?
So, one, we should avoid linking the FPI outflows to merely saying that what are the XYZ measures that they face. Because the outflows are contingent on several factors.
Agreed.
And even if sometimes the conditions and processes are very tough or very cumbersome, but if a lot of money is to be made, people will still come in there, right? So I'm only looking at the structural factors, where whether or not what is the current FPI position is, we should be easing business. And when we say easing business, it's easing businesses everyone without diluting risk. For example, if you are taking too much of a time for registration, you are not doing particularly very much due diligence because you are taking time. Because documents would be the same, the examination will be the same. The process itself may be problematic. Suppose you were to wait for wet signatures and apostille documents and so on and so forth, and then wait for a postal delivery. And on the other hand, you can have a digitized registration, digital signatures, which will actually instantaneously deposit all those documents. Now, what has changed? The time has changed, this thing has changed, but the risk remains the same. So therefore, registration as a process where we look at it should be easier, and that we started looking at very closely and made enormous progress working with the FPIs themselves. Then the second one is there were certain other key structural constraints which they have been facing and for many years. Like, for example, the block deal framework, where block deals were not really, framework was not so favorable in order to actually buy on a particular level. So that was facilitated after due consultations, of course. And the third was the closing auction mechanism. And there again, a structure is in place because this issue has been on works for a long time. And at some point, we had to reconcile between how the domestics feel and how the FPIs feel, and bring about a more, reconciled approach and working out a mechanism which actually was required. The fourth is on the FPI netting. This is a consultation paper. This is something which they have been again asking, why should I be asked to, do it on a gross basis when I have a certain, I'm doing buying, I'm selling, and there's a money that I am going to get, and there's a money I have to pay. So can I do it on the net basis, which is actually like save you on cost. Your capital is more efficiently utilized. These are the kind of things that we are looking at now in the consultation paper, and very soon will you get to it. So the registration and the structural processes, and the fact that we also gave clarity on the T+1 settlement, that T+0 is not something that we are looking at, are kind of measures which actually gives a medium to long-term certainty on how the things are going forward.
So you are going to keep the T+1 settlement going forward also. There is no rethinking on T+0 is what you're saying. Also, just a small clarity needed, as you said, that consultation paper in the works for more measures for the FPI, especially when we see the additional mandatory disclosure requirement increased to 50,000 crore from earlier 25,000 crore. Some more measures are coming, in your regulation of that sort?
That is again an ease of doing business, because the 25,000 crore limit was getting onerous for them, and so therefore we had to keep a higher limit. Certainly we should be really looking at, in fact, I forgot to mention our initiative on Swagat FIs. And two more things. Swagat FIs is one where we say that long-only funds, sovereign funds, and retail funds with a widely, like UCITS and others, which are well regulated, insurance funds, pension funds, these can be given a Swagat status where we have a much better, much elbow room for them to operate, longer license, the single license they can operate, and much less requirements. This has also been put in place. And then we have also better facilities for those which are exclusively dealing with government securities, and so on.
So you also recently talked about reviewing the portfolio management regulation. What's the thought behind that?
The thought is that whenever we have regulations which are there for 5 years or 10 years, and we are looking at it, what are after the experience, what are the difficulties which have cropped up, or whether some things can be made simpler, or some of the other newer areas have come in which can also be put at. For example, there is a demat issue, like if you have portfolios, when you have a portfolio transfer from X to Y, you can actually transfer the portfolio, but you have to open another demat account. So then it will amount to actually squaring off your position and then buying another set of positions. So if we say that on the demat account we have change of power of attorney, because the securities in any case belong to the investor, and that will make it that much easier. It will make it efficient also. So these are the kind of measures, when we do a comprehensive review, we can look at what else can be done. This we did for stockbrokers regulation, we did it for mutual fund regulations. We are going to do the same thing for LODR regulations. We are going to do similar thing for settlement regulations. And we are also adding PMS regulations as another one to have a comprehensive review rather than a piecemeal review.
Okay. Now, just to follow up on the same line, that when we could expect that regulation, because I'm assuming you will come out with a consultation paper followed by the final regulation. So
yeah, of course. So therefore there will be a, as I said, varying kind of timelines depending upon. So the issue is that, that ease of doing business, and this is not something a one-off kind of measure. It's a continuous basis. We should keep looking at it and seeing to it that the policies keep evolving to a level where the newer things have come in. A lot of, for example, is something to do with the new markets, new market development, the new products which need to come, something about corporate bond market. So that will lead to a newer set of regulations too, or maybe simplification of regulation or newer measures to do that. Like in terms of derivatives, for example, that if RBI and SEBI are working on the corporate bond indices and index derivatives around it. So therefore, you will have the newer products coming to the market, like we had electricity derivatives which were introduced in the two exchanges. Then in commodity derivatives, the two working groups, the agriculture groups, and the third working group on non-agriculture will bring about several issues which are, which we can address and make trading more efficient, and also, allow the derivatives to develop more fully.
Okay. So we have maybe 12 or 13 more minutes. I'm going to try and take the liberty of asking you a little bit about the derivative space. Now, any study that SEBI would have done or anybody else would have done would make the measures that have been thought of, taken, implemented, etc., seem to be a no-brainer. I would love to understand from you, sir, whether you believe the entire ecosystem in general, and not just SEBI in particular, the measures that have been taken to try and curb F&O volatility as well as maybe to an extent participation from retail. Are they truly proving to be effective, or do you reckon more needs to be done?
So first of all, I would say that I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is.
Okay.
So F&O is a very huge space. There's futures and options, and futures we nobody talk. Let's not drag futures into it.
Fair call, sir.
And let's have an options. Options also. Let's not drag all options into it. Or let's have weekly options. That's okay. Weekly options, index options, where you have high hyperactivity of derivatives on the expiry day. Well, that's an issue, and therefore and linked to that, the market regulation measures were put in place, first in October 24 and then May 25, set of 6 kind of measures. The last one was kicking in on December 6, I believe. So therefore, let's give it a go and then look at impact, look at data analysis, and then let us chew it, and then let's see what way we should move forward, if at all we have to move forward.
Okay. Sir, but I'm sure, whatever little one can gauge of you in your first term, you are thinking multiple years ahead as well. Do you sense that if the data doesn't prove to be conclusive enough, that participation of the 89% or 92% of the people who are losing money trading options is improving, would more stringent measures be in the offing?
So what we have to really look at it, that eventually, when you create markets, we should not jump to, kill the markets. True. And there is a market development that we call it, and there's a lot we can learn from the markets on how to regulate it. There is, for example, this data which was put out. Now, this data was actually a matter of education as much as a means to jolt ourselves into some action. It was an education because individually you would know that I am trading. You would know collectively how in this product everyone is making money. By putting a collective data together, we created an awareness that this is one segment where the people were losing, and then people actually started discussing why they are losing and finding really rational basis for why they would be actually losing if they are not really prepared for it. On the one hand, you had an influencer market which was developing on its own post-COVID and giving a situation, and I would say a utopia or a pipe dream to the people, to the young persons, that here is a panacea, here you make money overnight, and here is a way you can, and those were based on very false claims, and they were based on pretensions, misleading claims, and therefore, there was such a kind of an hyperactivity which was also being propelled. The people were paying first in order to learn how to do the options, and second time they were losing when they were actually playing options. Now, but then there was also a learning for them. And we can't say also that they didn't learn about the stock markets while doing this. So the question is, how do we really create investor awareness? Because many a time, investor awareness is on doing things. And you can't just lecture it and say that this is the way to do and that's what. So I would say that, we have to see what effective measures can be taken to decide first what are the distortions are there in the market. But there are people in the market, like there are markets where everybody is not a win-win. There will be some people lose and some people win.
No, sorry, just to follow up there, sir, very quickly, but could the measures be of another nature in that if there are more stringent measures coming, in that maybe the definition of, an accredited investor allowed into derivatives, or instead of taxation, which is anyways not under your ambit per se, but maybe increase the size of the option to kind of curb participation?
So, there are several suggestions. There are several suggestions on different sides. There are people who said it should be banned. There are people who should have regulated better. There are people who say that nothing should be done about it. So all these different inputs, they keep coming to us. in thousands of emails. And the more this media discusses about this particular issue, the more hyperactive the system of inputs also becomes. So it has to be, we have to basically be patient, look at the data, analyze it, find out what possible measures, if at all, needs to be taken, discuss it and move forward. And we should not be really jumping into, we did take a set of measures, thoughtful measures after consultation, and we should not be really jumping to, just like that, to another set of measures so soon.
So can we assume that a consultation paper is in work and it will be put out soon? Can we say that safely?
No, I mean, it will be, we will certainly put out the data soon.
Okay. Moving on to a topic which I would like to know about on the Jane Street, when we could expect the final adjudication order in that case, and what is the status of that matter? We all know that Income Tax Department is looking at from the tax perspective, but from regulatory perspective, when we could expect the final order in the matter?
So I'm sorry to say, no specific case, especially the one which is sub judice.
Sure. I can ask on the NSE as well, just a clarity needed, because they just got the go ahead and the no objection from SEBI, and but there are back and forth on the settlement amount because there is no clear final order on that aspect. When we could expect the final settlement order for NSE so that they can start working on the IPO?
So there is a process within SEBI of arriving at settlement, and there is a committee process, and it will go through as per that, and you'll come to know.
Okay, you're not getting many answers. Okay, last two questions, sir, and I think we'll be well within our time. The recent moves, and I know it might be difficult to really change, but I think we spoke to a host of brokers when this prop trading regulations were being spoken about. And I think one ask was that can it be in a measured way so that the jolt to the business is not too sudden? Any thoughts on that, sir?
I think there is already a timeline there. These measures are going to kick in, at a certain point of time,
April,
not immediately.
But sir, since brokers are under, your purview, just wanted to understand, are you, because they made representation to you flagging the concern on the liquidity, etc. Are you considering, any sort of that concern which they raised recently?
No, see, it's an RBI's purview, not SEBI's purview in the first place, bank lending. But RBI had put it out as note on all the capital, funding to capital market intermediaries. And there were various issues, acquisition financing, this financing, and different kinds of financing. And then the inputs were sought, and I believe the inputs were given by the industry to the RBI. They received it from different quarters. And then there was a final, what was the decision and the final advisory. Now we got it in last Friday, NM, a representation from NME. And we said that, okay, we will look at it. Look at it from the point of view of not that we have the regulatory mandate on it, but to say that whether we need to talk to RBI on this issue. But the fact is that, on one case, it was made out that as if some of these measures were like a bolt from the blue, and they were actually not in the consultation papers, and they just came up after the consultations was done. We saw that, and that was not the case. It actually was there in the paper, and so therefore it was, rather initially it was banned, and then it was given with 100% collateral. So I think that, there's no cause for us to intervene.
Quickly on the SME IPO, sir, because recently the regulation has been tightened. Just wanted to understand what's the thought process behind SME IPOs. Do we see more regulation, more curbing coming?
No, we have no regulation coming. We have looked at the SME IPO framework some time back, including there was a tightening of the framework. There were certain new measures were brought in. Those measures seem to be working. We are monitoring, and exchanges are also doing far more due diligence in the process. So that's it.
No, but any case study, any cases which you observed in past few years, and why only the SME IPO? Why not the main board IPO? Because the concern is kind of same there as well, as far as valuation is concerned.
No, I have replied on valuations earlier also. We don't get into the valuations. It's market discovered, and all what we say is that there should be more disclosures and more particular disclosures, and those disclosures should be as legible or as favorable to investors as possible in terms of readability. And that is how we are going also for a new concept called draft abridged prospectus at the draft stage also, so that the people are able to see more important information in a short time.
Got it. Sir, as we wrap up, just 1 minute more. What is top of your agenda, sir, if you can just spell it out over a minute, for the next year, when we come to interview at the same time next year?
I think life goes on. From one day we move to the next. Thank you.
Okay, well, I guess that is about the answer that I was expecting, but I tried any which ways as a journalist. But thank you so much, sir. Lovely talking to you today. Congratulations on one very successful year. We've been privy to some of the best things that SEBI has done, and look forward to one more fabulous year, sir. At least.
Always pleasure speaking to you, sir.
Thank you
so much, sir.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode sing girl, sing girl, sing girl, sing girl, sing girl, sing girl. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot.
Good evening, I'm Vikram Oza, and this is the big question on NDTV Profit. Tonight we start at the world's tightest energy bottleneck, if I can call it that. We're talking about the Strait of Hormuz. Now that is that narrow blue ribbon that you're seeing over there. Yes, this is the part between Oman and the UAE on one side, and Iran is on the other side. And yes, that is the most critical oil choke point on the planet. This is the one connecting the oil-rich Gulf to Asia, to Europe, and to North America. That's the important bit. Now, here's the squeeze, only 33 kilometers. At its narrowest, it is only 33 kilometers. Shipping lanes barely have 2 to 3 kilometers wide in each direction when they're moving. And yes, Tehran has often used it as that geopolitical pressure tool. So that is that important bit between Oman and UAE on one side, Iran on the other, which is why this is so crucial. The sliver of sea matters so much. It is the only sea passage out of the Persian Gulf carrying roughly a fifth of the world's daily oil and about 20% of global LNG, with nearly 80% of those cargoes headed towards Asia. Now disrupt that tap and prices, they don't just wobble, they jump, because insurers talk about shippers, you talk about traders. Oil price is the risk. Now for India, this is uncomfortably close to the bone. We import about 85% actually of our oil and nearly half of our crude and around 60% of our LNG. All of that sails through that important Hormuz Strait. With Russia flowing now, as far as those flows from Russia are concerned, yes, they're normalizing. Middle East barrels, they're back in the mix. More of India's crude has been coming through this particular corridor in recent times. So it is crucial again, which means a squeeze here could lead to a fatter import bill and also higher LPG, LNG sensitivity and freight and insurance spikes that show up in our inflation, in our household budgets. But yeah, you're probably thinking, we've seen this movie before. Wars push up oil prices, they go up higher first, then the market reroutes and then cools off. But it does not happen before a risk premium burns a big hole. So if you recall, during the Libyan civil war and also the upquake attack by the Houthi rebels in Saudi Arabia, crude oil prices they definitely went up. And during Russia-Ukraine, oil prices ripped past $120 a barrel before it started retracing. So even now, the headlines of Iran targeting oil flows, and that includes the Ras Tanura complex, they're enough to light a fire under Brent. From limited retaliation to the direct hits on Iranian infrastructure, from a Hormuz disruption to a broader regional conflict, the price ladder of oil is pretty clear. First, you add $5 to $10, then about $10 to $12, then you go past $90, and then in the worst case, you go past $100 a barrel. And every rung means a wider CAD, a current account deficit, will widen. There are tighter margins for oil marketing companies. The oil marketing companies definitely take the hit, and costlier aviation fuel, don't forget, that has a pain point of its own. Also pain for paints, for tires, for chemical companies, for cement. Any industry that is connected with crude derivatives is going to feel the pinch. Which is why tonight we're asking the big question, which is right up front on the screen. Iran war is now escalating. There is no doubt about that. We are seeing it unfold. Some people are saying it could become worse before it gets better. If it does escalate, what does it mean for our energy security? Is India prepared this time for an oil shock? Let's ask this question in a debate form, which is about the big question, and we've got an excellent panel to take this across to. Let me introduce you to them. Well, tonight on the show, we've got a great panel, like I mentioned, and indeed, it is a panel that will be able to take this on very well. Energy expert Narendra Taneja is with us, along with a diplomat with years of experience. Ambassador Anil Trigunayat is here. Biswajit Dhar is also joining them. He is a developmental economist and he's the former professor at JNU. Also chief economist at Kotak Mahindra Bank, Upasa Bhardwaj is with us, along with Sonam Srivastav, founder and CEO of Right Research. Thank you, ladies and gentlemen, for making the time and joining us. Let's quickly do a quick round of questions. Short answers, please. If you can give me your elevator pitch view on India's readiness for an oil shock, given the escalation that we are seeing right now. Narendra Taneja, as someone who has tracked India's energy vulnerabilities now for decades, with half of our crude and most of our Gulf LNG passing through that Hormuz corridor, It's barely 33 kilometers at that kind of width when it's at its narrowest. Do you believe India is actually prepared for even a temporary choke in the Strait of Hormuz? What's your current risk reading right now?
Well, as I said, earlier, my worry is not, India's worry is not so much the movement of, oil through the Strait of Hormuz. Our worry is always the price. Oil is a globally, commodity and is benchmarked against the demand and supply of the globe. So number one, our worry is the price. Second is that the Strait of Hormuz has never, ever been closed. So I'm still think that, Strait of Hormuz, probably Iran is not going to move in that direction. Two reasons for that. Number one, they know that in that case, Saudi Arabia, and Iraq and Kuwait, etc., they will also get into the whole thing and against Iran and maybe even intervene physically, militarily, wherever possible. And second, very quickly, I don't think the American forces are going to let them do it. But yesterday only Iran's foreign minister said there is no plan. They are not going to shut down the Strait of Hormuz. China will be the worst country affected, which is very close to Iran, in case the Strait of Hormuz is closed, shut down or mined.
What do you say, Ambassador Trigunayat? You've seen regional diplomacy from up close. You've done it for years. Given this latest escalation, the strike on infrastructure that is linked to Ras Tanura, do you think India has enough goodwill, enough leverage across Tehran and Riyadh and Washington as well to keep our energy lifelines shielded if things go downhill from here?
Well, I think it's beyond India now. We have goodwill. There is no doubt about it. But at the same time, they are in a war. And Iran is in the fight to finish at this time. And therefore, they will deploy every single tool in their kit to bring about or inflict damage on the region as well as on the world, and Americans in particular, and Israel. So I think that we have just seen the beginning. There is an attack on the refinery in Saudi Arabia already, and the 150 ships that have been stuck. One of the oil tankers was sunk yesterday. So the situation is not at all going to improve in days to come. Now, while the supplies may be restricted, and I feel that the prices have gone up quite significantly, and a $10 adds to roughly about $1 billion, a 10% increase in that. That is also their calculations, which you have already yourself shown.
Yes.
And that will have a very big impact. Of course, we have about 45 days reserve with us. We can manage with them, but that is for other contingencies, not immediately for this. So we could perhaps bear this brunt. But the irony is that the Americans, they have been, forcing India to diversify from Russia, the oil.
Right.
And we started importing much more from Saudi Arabia in the meantime, or from the Middle East. And now they go and attack Iran and just constricting everybody else's. So you can buy from US, you can buy from Africa, you can buy from Latin America or Venezuelan oil, as they are talking about. But all that is also to pass somewhere. And those choke points are going to be pretty difficult for us, at least for going forward for 3-4 weeks. So that's a very difficult situation. Yes.
Correct. Biswajit Dhar, from your development and trade lens, these numbers are pretty stark because a 10% rise in crude can widen India's current account deficit by 30 basis points. Our import dependence still sits at 85%. So in your understanding, how exposed is India right now to the broader economic stability map? If crude holds above, say, $90 to $95 for a few weeks, how much damage can it cause?
No, I think this is going to be quite damaging for India because, for one, we have actually been able to bring our inflation under control. And that has actually helped our macro fundamentals a great deal. Now, if oil prices go through the roof, and there are expectations that it might go up to $100, $120 per barrel, now that is really bad news. Now, that is also going to put a lot of pressure on the rupee. We have already seen today there was considerable pressure on the rupee, and it's closed above $91. I think it hasn't happened for the past few weeks. So we are going to face this kind of a double whammy.
Yes.
On the one hand, our rising current account deficit, and of course the inflationary pressures, and since we are so import dependent, the impact on the rupee, and unless RBI intervenes, and there are reports that RBI has intervened today, if RBI is not able to intervene effectively, then there is going to be another impact that the economy is going to be facing.
Let me ask Upasana Bharadwaj if she agrees. Upasana, the macro impact, it's generally the kind that shows up fast. Even a $1 rise in crude can add about $2 billion to our import bill. And then there is the LPG, LNG sensitivity, which is even higher. So in the current environment, all this global volatility that we are seeing, and it is rising, do you feel India has the monetary and the fiscal buffers right now to cushion a sudden oil spike without derailing the inflation trajectory?
A couple of things, Vikram, as you highlighted, there are different scenarios to work out with right now. It's just the beginning. We don't know whether it's going to last for 7 to 10 days or maybe more. Now, the question is, if it is a temporary phenomena, then I don't think much changes for the Indian fundamentals. But of course, if it does get overstretched and if the crude oil prices sustain above a certain level, then it's not just about the price, actually. It's about the supply side disruptions. At this point in time, we can talk about the strategic reserves which are adequate, which can take care of our requirements till a certain point in time. But I think the supply side disruptions, the logistic cost, the insurance cost, the risk premium attached to that, along with that, the cost of input prices going higher because of the supply side disruptions and the pass-through. And as Professor Dhar was also talking about, it's a double whammy. So we're talking about higher costs, not just of energy, but other input prices.
Yeah.
Along with that, rupee weakening.
Yeah.
So there is a double impact coming into the picture.
Yeah.
So obviously, as we go through, and if this lasts, then clearly this does have significant adverse impact across the board, from current account deficit to inflation to overall GDP numbers. It will have a bearing.
Sonam, from the markets sense, we've moved sharply, of course, the markets have. Brent has jumped nearly 9% on the latest headlines. You're tracking sentiment in the markets. From where you're sitting, is this the start of a sustained risk premium phase for oil markets? Or do you think this is a classic fear trade that could unwind just as quickly if the tensions stabilize?
See, I think, we definitely expect the impact on the markets to be short-term in nature. If you analyze the impact of previous few wars, right? You would see that, okay, there's initial reaction that happens in the market, but then such corrections that happen in the market tend to be short-term, right? So we expect the market to stabilize soon, given this correction. But yeah, I think there are bigger worries coming because of the escalation of crude prices, the impact on growth in India, inflation rising up, and currency depreciation that would sort of play around with the market sentiment. So I won't say that the market sentiment would improve in a week or so, but yeah, I think it would stabilize sooner.
Now let's deep dive a little bit. Narendra Taneja, what do you say? I'm just getting news about Qatar Energy, and this is one of the world's top natural gas producers. And they are saying that they are going to halt their LNG production because of the Mideast war. Now that it's raging on, they are talking about the pressures, which is why they are ceasing production of liquefied natural gas, of LNG and associated products. Do you sense there is going to be more of this? Let's get the core risk over here. If we see a limited weeks-long disruption in Hormuz, what does it convey to you? There is the slowdown insurance premium that goes up. What's your base case on how much crude actually gets delayed and for how long before rerouting any of this? Anyone, of course, from the panel who agrees, disagrees, please raise your hand to rebut. But I would like to get a view first from Mr. Taneja.
You see, there are two big issues here. Number one, that unless and until Iran decides to kind of, force closure of Strait of Hormuz, I think I'm not worried too much. And secondly, if Iran decides in terms of retaliation to move its boots, the army, into a neighboring country, let's say for the sake of discussion, which many people are talking about since morning, Kuwait, then of course the landscape changes. Then it means that Iran is basically prepared for a long-drawn war. So far, if you go by the statements and the movements, it appears that Iran is not prepared for a long-drawn war. And the US certainly is not, and Israel is not. So in such a scenario, my own sense is the next 7-8 days are going to be tough in terms of the war. American and Israelis are going to do the maximum possible damage to Iranian infrastructure, electricity, water, and the overall infrastructure and try to do as much as possible, then leave it to trigger a kind of a response from the people on the ground to go for a regime change. Takes 6 months, 1 year, nobody knows. In such a scenario, I think we don't need to worry too much. My own sense is oil prices may go up, may even touch $95, $100 per barrel, and so on and so forth. But after that, they will go back to where they should be in terms of demand and supply fundamentals. So I'm not worried. I'll wait for 7-8 days. My own sense is, first and foremost, American economy, President Trump himself and his party, they cannot afford oil prices to touch 90 or 100 and stay there for a longer period. Politically, his party is facing elections very soon and they just cannot afford it. And my sense is they have done their geopolitical mathematics, which is basically 8 to 12 days window. Within that, they are going to manage the oil prices, gas flow, and so on and so forth. At the same time, make sure that the whole thing does not escalate. So that's the assessment most people have in the circle that I move in, globally, in energy geopolitical circle. But as far as Qatar is concerned, those fields, as you know, ExxonMobil is the biggest investor in the field you're talking about, the LNG. And the second thing important to remember, that a refinery has been already bombed, but that is a small refinery. I've been myself there several times. Not too so much worry so far. Oil is flowing. Oil wells across the region are functioning well. The only disruption is the tankers are not able to. Not that there is any kind of, has been shut down, no such thing, but they're just precautionary, because Iranian forces send a radio message to all the tankers around, don't try to cross, otherwise we'll bomb you. But they have not bombed any ship so far.
Not bombed any ship, but if tensions do rise, as they seem to be, Ambassador Trigunath, do you think India can get some quiet assurances from Riyadh, from Abu Dhabi, from Doha, and Tehran perhaps, to prioritize Indian liftings? Or do you think the great power dynamics are going to overshadow the kind of bilateral goodwill we have been able to generate? What is India's best back channel lever at the moment?
Well, I think we have been talking to all the people there. Dr. Jaishankar has spoken to Iranian foreign minister and all the foreign ministers of the region. But that was mainly in the context, of course, energy security, but on the context of the safety and security of about 10 million Indians who are there.
Correct.
So I think that has been one of the immediate priority for India. And therefore, what India wants essentially is to de-escalation, dialogue and diplomacy. That's precisely what we are trying to push for. The Prime Minister himself has spoken to Netanyahu as well as to the UAE. So all these countries, they have to sell their oil. And I believe the OPEC might go in for increased production as well. But the problem of passage, and I hope that what Mr. Tejas has said could be true, and let's hope it remains that way. So 7, 8 days, 10 days, 15 days can be managed. But beyond that, I think it is going to definitely have an impact. As far as Iran is concerned, it needs an off-ramp. Now to be able to, they might look for some kind of an adjustment or, for example, just calming down. But for that, the Americans are also in a lot of problem at the moment. Firstly, they waged this illegal war. It is internationally illegal as well as illegal domestically, for the US Congress has not authorized it. So they are trying to call it as some kind of a special anti-terrorist operation and all that. So this can't go on when the body bags start reaching. So the Americans will be under greater pressure to de-escalate also. So let's hope that good sense eventually prevails.
Correct.
We have not seen that very much.
Yes. So the hopeful version of this is that there will be a de-escalation, because the US cannot afford to keep this going from a political standpoint and not keep oil at elevated levels around $100 to the barrel. But Biswajit Dhar, assuming that Brent stabilizes in that region of $90 to $95 a barrel, and if that happens for a few weeks, then what is the impact? How does that filter into the current account deficit? How much pressure does it build on the rupee and the imported inflation in the near term? How much of this could actually percolate? And if you are going to tell us that it does have a big impact, then what's the one macro buffer that India should lean on first?
No, look, if the oil prices today, Brent is about $82 a barrel, and if it goes up to $90, $100 a barrel, then there is surely going to be an impact on oil prices and therefore inflation in India. And if that happens, I think all the calculations that RBI has, the inflation targeting and, and all other things follow, how to manage the inflation and whether interest rates will then be impacted and all. Then you go into a whole, sort of a tailspin. And you're looking at a scenario where the RBI was actually, gradually bringing down the interest rates and trying to provide some impetus to private investment. Now that is going to be seriously impacted. Now look, the kind of exposure that we have to imports, and if you look at the way our import dependence on China, for instance, has been continuously increasing, and this year is going to be crossing $100 billion. The deficit is going to be more than $100 billion. And with all these free trade agreements which are happening, the first impact of these FTA is going to be increase in imports, and then exports usually follow rise in imports.
Correct.
So we are going through a situation of adjustment already, and on top of that, we have this sort of imported inflation that you talked about.
Yes.
Which is going to be a tall ask for our macroeconomic stabilization.
Exactly. Upasana, do you want to weigh in on this? If crude pops $10 to $12 from this point, do you see the Monetary Policy Committee's reaction function changing? Hawkish rhetoric, extended pause, perhaps a bias to shield growth given supply side nature right now? What's your CPI glide path risk right now?
Okay, so just two things. I think on an average, if you look at the expectations on crude oil prices before this crisis, across the markets were in the range of $60 to $70.
Correct.
That was a range of assumption that mostly markets were going with. So from there, we are already $10 ahead, right? Now we're talking about another $10. So if you're talking about an average crude oil prices going up by a $20 a barrel, then that clearly brings in a very big risk, because we're talking about 0.8% of an impact on CAD. This is only the first leg. The second is when excessive current account deficit pressures build up, and when crude oil prices go higher, then whatever small amount of FPI inflows have started at the margin, we do start seeing a significant risk there as well, because flight to safety starts again. I mean, we've already started seeing that impact on silver and gold again.
Correct.
So I think here it is again a double problem. We're talking about a balance of payment deficit worsening from the current levels. That's one. Having said that, I think we should keep in mind a couple of things, that if it doesn't really go beyond a couple of months, this problem, then I don't see too much of a risk persisting. I think we will revert back to normalcy.
Okay, fair enough.
Secondly, there is an excise duty cut. There is an excise duty cut which the government can use as a lever. Of course, it does put pressure on the fiscals, but one of the institutions have to bear the brunt of it.
Right.
So I guess the government, if a pressure is arising, will take that onus on itself, and the government could potentially go ahead with a excise duty cut, to ensure that we don't really see a pass through to the consumers as much. So somewhere the monetary policy could get that kind of a leeway,
right?
Coming to there.
Yeah.
Overall, the roadmap on inflation at the moment is comfortable. We can afford a little bit of spillover, of course, depending on the sustainability of this problem.
The sustainability of the problem is the big ask. And Narendra Taneja, one wonders if one has to change our sourcing mix. Russia flows are variable. Middle East barrels, they are the dominant piece. Is it time to re-diversify? Are we to look at West Africa, the US Gulf Coast, Latin America, even at higher freight, just to reduce the risk of that choke point, which is Hormuz? What's the realistic remix that you see possible in the next 90 days? And very quickly, if I may ask you, since we're running out of time.
Well, we have already done that. Today, we are importing crude oil from 41 different countries, including from Guyana. We even import from northern Norway in the Arctic region. We have done all that. I think that the issue right now is that I don't really think, I'm looking at basically two ways. The next 10 days, my own sense is things are going to get back to more or less normal. Oil will start, flowing through the Strait of Hormuz under military or without military. We'll have to wait and see. But I think the flow will start. I really don't see. And then the oil prices will go back to where they should be. If you go by demand and supply fundamentals, oil Brent today should not be more than $60 per barrel. There is no supply disruption as of now at this stage. So I'm not